how do developers pick up the pace to match this enthusiasm that residential sales are showing? What's your view on this? And one unrelated question is the equity going to come in? Is more equity investments going to come into real estate, given where we are?
Yeah, I mean, I'll address two different things. NBFC will come to it later. There is large sums of equity capital sitting in. Maybe people like Goldman Sachs, Blackstone, or Brookfield. There are a lot of other pension funds, a lot of other sovereign funds. Plenty of capital sitting on the sidelines. And I don't think if entire money comes in, I don't think we can even consume 10% today. That's the opportunity available on the supply side of the capital. On the other hand, the market has gone through serious consolidation. There are only 20 people in the country who makes all the noise. They take care of close to about 70-80% of the market today. So for them to have the capital, NBFC need not be the only option today. Hence, for us to have the capital, we can knock at doors of people like Goldman Sachs and all that, and there is a big opportunity coming in now. For example, during this COVID, we got the second partnership from Mitsubishi. Mitsubishi has invested, as you know, with one of our projects in Chennai. They have, come with another project investment today. So these kind of large names come with large capital. So these top 20 people, I don't think they are dependent on NBFC. But having said that, NBFC side, there is a new opportunity which has come in the last about few quarters, is that wherever the NBFCs are stuck today, those projects are coming to us. For example, we assigned about 3 projects. There are quite a lot of other NBFCs, I don't want to give names. So they stuck with the other developers. Those projects are coming to it today. They are not in a position to come with additional funding today, but those projects are available at a throwaway price today. As we speak, there is another NBFC who has been bought out by, or being bought out by. They, opened a bouquet of assets to us with about 30% discount, 40% discount today. So that's the opportunity we are looking at now. So, and most of the senior developers are practically well positioned with respect to the cash flow. And I would say, I will not say cash rich, but definitely not cash deficit. They're in a very, very positive position today. Hence, NBFC is not going to alter the journey of real estate development the next 12 months time, at least is my view. If it comes through, it is well and good, but that's mainly was used for land acquisition, basically. Today, you don't need to go very aggressively for land acquisition today. If you want to do land acquisition, you can get this, capital raised from the senior, private equity players, and as well as, you can liquidate some of your assets. These are all the probability now. And the existing NBFC asset, if you are buying it at,
discount,
huge discount, yes, again, there is capital available today. So that's the opportunity I'm seeing now.
Okay, so Murli, 2 or 3 things you're saying. You're saying that Resi equity is starting to look, and Mitsubishi is a new name. It's not that common. So obviously, it also means new capital that's coming in. I don't know whether Naveen is on the call yet, but I think Naveen is also tied up with a Japanese capital during lockdown. During lockdown, Naveen, you're there?
Yes, I am.
Yeah, hi Naveen. Murli was just saying that he's tied up a deal with an equity deal with a Japanese investor. I think you've done similar. And do you think new equity capital will flow in given the positivity around residential sales at the moment?
So we are seeing that, Shobit. Hi, everyone. On the equity side, on the residential side, there is a lot of discussion happening. We've closed one and we are actually talking to them about our second transaction. And generally, we see a lot of interest from Japan, and a lot of Japanese investors are looking at it. And also because we are in BKC for our commercial assets, we are doing a lot of transaction on lease side with a lot of Japanese conglomerates who are looking at setting up big setups in India. Also, we had a board meeting with Marubeni, who's our Japanese investor. What they feel is that where India is today is where China was 15 years back. So they have a huge view on India. And given with this COVID and the relationship with China of the world, India is the flavor to them. And these guys are very gung-ho about India and are very, very passionately looking at doing things rather than just evaluating. They are serious and they want to do and are willing to take calls.
Thank you, Naveen. I'll just bring you in, Sai. You do a lot of advisory work on the documentation side on some of these marquee deals that happen. Um, I'd imagine you'd be more busy doing commercial side of the business. Are you also seeing or people talking to you, investors, global investors talking to you on the residential strategy?
That's right, Shobit. In fact, I'm glad you asked. I was about to jump in even before the question, but the flavor that we've been seeing in terms of investment was more debt type, pure debt type transactions with recourse, etc. But and especially during the COVID time when there was obviously a softening of prices when things started really going back up, at least we clearly started seeing inquiries for more equity type transactions, though not full equity. The only equity deal that I think I'm aware of in this space is, I think it's public, is the Rustom G1 where Keppel Land of Singapore came for the very first time. So that was a very good example of someone taking a view on the residential sector and its fortunes going forward, despite the time during which the deal was done. So I'm hoping that's going to be the start of many of these, but we're increasingly starting to see lesser or zero recourse deals. When I say zero recourse, none of your security and the usual kind of debt attributes that are there, but which are more predicated on sales and cash flows, which hopefully will then transit to a pure equity kind of play. And secondly, to your other question, it's not the same old faces, fortunately. We are, at least I personally have seen at least three new persons who are looking at three new investors who are looking at this space for structured kind of transactions with a more equity than a debt flavor. Which is a positive thing, right?
There's very positive news, Sai, that, after a very long pause, we are starting to see equity come into residential or equity style investments come into residential. I think this will go a long way in creating the next cycle, up cycle on residential, which in my view just about started. I'm going to bring in Gautam. Gautam, just a quick question. When I spoke to investors, resi versus residential versus commercial, I think the big plus for commercial was on two accounts. One, on efficiency of capital, because the tax, you were getting tax rebates. And second was this RERA issue. They were just scared of customers creating a ruckus on the RERA side, and therefore some liability coming out of it. Are you seeing any change in attitude, especially on the financial efficiency of the transaction? So, Gautam, are you there?
Yeah, I'm here. Can you hear me?
Yeah, I can hear you.
Yeah. So, are you talking of financial efficiency of the transactions on the resi side? Or
on the resi side, as opposed to commercial. I mean, that is a big giveaway because this commercial side is very tax efficient for foreign investors, whereas in residential you don't get the same benefit. But is something changing there? Is something happening on that side?
Well, the only thing I heard you must have heard in the budget was something about resi, rental housing, right? And to my mind, it's a little too early for all of that. I think what really helped the commercial side is also the REITs. And it's, as you know, it's been only the commercial assets which have gone to the REITs. That's also helped to kind of roll over the assets and roll over the capital. And once investors see an exit option, which has played out, I think it gives a lot more confidence. To me, the next natural step would be an expansion of the REITs exit option to resi as well. But we are a bit too early in the game for that. And there will be time for that plays out. So yeah, it's great after 2008 seeing capital come in a different positive way on the resi side, and the market is matured, players have matured, and very importantly, investors have matured. Right. So I only see positivity going forward, but yeah, it's going to take some time.
Super. I'm going to, you mentioned 2008. I'm going to bring in Rahul. Rahul has been looking at the markets in his previous avatar. He's been advising people on listing. if I don't recollect, last listing was, I think, Oberoi Realty 2008-9, that genre. And since then, nothing on the resi side has come up. Is this going to change nearby? We've heard that only yesterday a draft red herring prospectus has been filed by one of the developers. Do you think there's appetite for residential-led developers and listing it in the Indian Stock Exchange?
I think, thanks, Shobit. I think that's a great question. So Oberoi was listed back in 2010, so around that 2009-10 genre. I think, of course, the real estate sector has undergone a sea change since then. And the associated lenders, also have taken a big knock. And of course, that's been popularized around the world. You've heard many examples, also out there. Now, I think there's an increased sensitivity amongst investors that the sector has been by and large cleaned up. There is a proper regulator who've got the teeth to correct things. Of course, we keep hearing examples of, the defaulted developers, etc. Have been systematically cleaned up from the system. So therefore, I think one of the big reasons why the real estate sector fell out of favor was the corporate governance issues, which have become extremely pertinent worldwide. Now I think fast forward to post COVID and what we have seen on the NBFC side as well as on the banking side, I think the real estate sector in our understanding is definitely finding a favor with a lot of investors. So while of course it's to comment on the IPO pipeline, etc., but clearly in our conversation, we do see, increased interest on the resi side, particularly. And this, of course, is also reflected in my domain expertise, which is, the banking sector, the housing finance companies. If you would have seen, they've also kind of, bounced back, because one of the ways to play the resi space is to buy some of these housing finance companies in absence of, some of the pure play options being available in the market. So it's, in our opinion, I think if there are good, credible companies with strong corporate governance and with strong visibility of the future cash flows, the projects, and importantly, the positioning they are created for themselves. And we all know the luxury got, shafted. The affordable housing has, taken a backseat. It's a medium ticket size kind of project. So if the positioning is also good, you might see, increase, demand from the global investors. So just to summarize, I think if the sector, behaves itself well, you will see, fair bit of, secondary capital coming into the sector.
Thank you, Rahul. I'm going to just shift gears from top line to bottom line, and I'm going to bring in Naveen and Murli. I heard both of them say that they're probably going to outperform or at least be equal or outperform last year's revenue on resi sales. How about profits? In my view, the margins should have gone up given everybody's trimmed the fat. But I'm going to let Murli and Naveen speak in that sequence, saying, are we seeing increased focus on profits?
Thanks, Shobit. This year, we would maintain the same amount of profitability compared to the previous years. But because of the market consolidation, is one aspect, the competition is coming down a lot. Practically, there is no competition today. So I expect the prices to go up because of that is one reason. The other reason is cost of capital also is becoming competitive today. That's the second one. Third one, the deals what are available today. Quite a lot of distressed deals are available today. Hence, what was available at 100 today is available at 70. That's extra delta which is available. So one side we are getting the raw material at 20-30% cheaper today. On the other hand, competition is not there. Because of that, prices are going up. Consolidation has happened. Prices are going up. Given all the circumstances, I look at next 3 years' time at least, 21, 22, 22, 23, 24. I expect the margins to go up at least by 20% from what developers are operating today. That's a hope.
No, absolutely. Naveen, you want to add something there?
Two things, Shoaib, apart from what Mr. Murli spoke. One is that because we are Bombay-centric, Um, developers really didn't bother on cost that much because of the sale value. And COVID has actually taught us to relook at a lot of things as to whether you need it or you don't need it, and cut the flap not only at your company level or corporate level, but even in projects. So we've seen that, when you go back on the drawing board and challenge each decision that you took initially, you've been able to cut your cost by 7-8% on the construction side itself. And that's practically, I think, each Bombay developer has been able to do that in terms of getting in more efficiency and challenging each of its thought, which they did. Apart from that, increased sales means increased cash flows, which means dependency on your bank reduces, which definitely saves your interest costs, and also interest costs is softened, which also adds to your bottom line. By and large, whatever Muli covered, I just think focus on ensuring that you do your project in far better cost and far more faster. Earlier you were doing 20 projects. Now in Bombay, we are like, let's complete the 5 that we have. So it also really adds to the bottom line, Shobit. And as I said, you may not see profit immediately adding up, but you are at least heading to that direction, which was not the case last year before COVID, where you were really not sure where it's heading. At least the direction is on the right side. Now, whether it's 1 year or 2 years is going to be depending on efficiency and how the market remains. And
No,
above all, in Bombay, we have premium reduction that will surely help to get things moving.
super. We've obviously spoken offline, but all the time you were talking about how developers were there was diminishing profits or really no profits until sort of last year. Suddenly are going back towards a greener balance sheet. And if not this year, obviously the future is very promising. I'm going to shift gear one more time and come to you, Sai. What are some of the things that you will see or you hope? And I think Gautam touched upon it very mildly, saying he used the word reuse of money or cycle coming to an end. While we're saying property cycle is starting, I also think that REITs have proven that there's a recycling of capital, right? So whether it's Blackstone, Brookfield, they've been able to complete one full cycle in Indian real
Yes.
estate, and that's changed the transaction size. Now I know where things are, but we've changed a lot of things on the physical side with RERA coming in, GST, etc., etc. What about things like title insurance and reps and warranty insurance? Because when we try and advise foreign investors, we spend disproportionate amount of time negotiating title and reps and warranties. Can there be any efficiency around this so that we become like any other foreign country that once you decide the commercial, you can go in and out of the deal in a month's time? What it takes right now, in my view, is between 2 and 3.5 months. Right? Can you achieve that?
Yeah, certainly. And on the title insurance part, I want to answer this in a slightly more expanded fashion to also include rep and warranty insurance, which is a different product. As you rightly said, I think we are seeing where funds who had invested earlier, maybe in the 5 to 7 year bracket, are now seeing exits in their assets. And this can be either in the warehousing space or in the commercial offices space, where they might either be divesting to a REIT or to another investor or other strategic player. The fundamental issue that we are facing is, as you rightly said, one of the core parts of an acquisition is really the reps and warranties and the indemnification for the past. Because if you're getting a fully priced transaction, you also need protection, right? But unfortunately, many of these funds are reaching, or have, in one case which I was just mentioning to you, is literally got only about a 1 year tail period, which is, and again, with no ability to call capital beyond a particular point, call back capital beyond a particular point. Then what do? So then what we've been seeing increasingly in transactions of late is a fairly robust amount of rep and warranty insurance policies being contracted. Title insurance, I'm not very hopeful. The last time I checked, the statistics seem to say that there were only 3 policies issued in India. But rep and warranty insurance, there's a significant amount of activity that's been going on. And 2-3 things. I think premiums have been say this from senior or in
Sai, I'm not sure whether
from London,
Sai, I'm not sure whether other could.
premium. Sure.
Sai, can you repeat, because I think you were breaking up. So I don't know whether only I can hear, but
Here you
could be.
The rest,
Now you are.
Rahul. Yeah. So was part now the insurance and we don't have unlimited, right? Giving there's no pay. We can lose kind of we you can keep price.
Hello, Mr. Krishna, your audio is breaking up. Request if you can, remove your virtual backdrop or at least switch off the video so your audio would be clearer, sir.
Thank you, Ronit. In the meanwhile, maybe I'll just bring in Gautam till he's settling. Gautam, one of the issues on funding side, and you would probably be best suited to answer this. There are lots of special situation funds that are participating and AIFs, right? But one of the big issues is they can't lend or deal with partnership firms or LLPs, whether it's issuance of debentures, loans, etc. And in India, there are lots and lots of projects that are either taken up by partnership firms or LLP. Is there a solution that you guys are driving? Because I think it needs a relook at this, right? I'm going to bring in some serious conversation here, Gautam, if you can come in on that.
Yeah, Shobit, I think that's a very, very relevant and pertinent point, because especially in today's times, as the earlier speakers mentioned, there is a K-shaped recovery. So the players who are on the bottom end of the K are really going to need a lot of at the top end, if they have to take over the projects from others, I think will be required. And as you rightly mentioned, the LP has come a long way in this sector in running projects. So I know there was a bit of a mixed house on whether LLPs can issue debentures, and all the more conservative views you cannot. And therefore, there would have to be legislative change or some specific clarification to enable that. I think the positive that I see is, if you would have noticed in this budget, the finance minister for the second time made a mention of saying we will let REITs borrow from overseas.
That's
REITs, as you know, are classic, which is to my mind a step further away from corporate structures as opposed to an LLP. And if this has now been permitted for trust, I think this is a good opportunity and window now to get this point across to the policymakers and regulators and say, look, very little difference between a corporation and an LP. So why don't we look at permitting LPs also issue securities, and therefore open the situations and AFs to fund them as well.
Yeah, absolutely. I think all it requires really, Shobit, as Gautam rightly said, is a simple clarification, which we are quite surprised is not forthcoming. But that will be a massive impetus to use of LLPs for these kind of financing.
Yeah, I'm sure Naveen and Murli both on this call will benefit hugely, because in many cases this becomes an impediment in consolidation, and both have sort of narrated that consolidation is a big trend. Sorry, Sai, I had to interrupt because we couldn't hear you. So you were talking about reps and warranties.
Yeah, so what I was saying was, apologies for that. So what I was saying was, really, off late, there's been a significant rush towards obtaining rep and warranty insurance in transactions. And that has really helped funds that are in exit mode and divesting assets to avoid taking a haircut on their assets simply because there's no recourse. Okay, so in other words, you have a fully priced deal where you get an exit and you don't have the hangover of liability, okay, beyond maybe a 1 year period for that two identified matters. And the cost also is very much under control, where the premium, depending on the size of the deal, we've seen of late between 0.5 to even 3 to 4%, which is clearly affordable in a deal, in deal. So there's been a rush of late towards warranty insurance, which makes me a very happy person.
And we, because that basically means we speed up transactions.
That's
I'm
correct.
not sure whether Murli and Naveen have been following reps and warranty insurance, but I think it's a new thing that's come up and it's doing really well. I would like to discuss title insurance as well. Murli, I couldn't hear you. You're saying something?
Murli sir, yeah.
Go ahead.
No, Murli, you're saying something, please do.
No,
If you had
please go ahead.
No, I was just going to bring in title insurance also because I think we spend unfair amount of time negotiating good titles. We go back 30 years and then go back 30 years. And actually, that, in my view, paves way for conflicts, right? If I hadn't claimed the property, I know I can claim now. And so many fraudulent claims come up on title because we keep investigating it when we buy it, when we lend, then when we sell. How many times do you have to investigate a title? Wouldn't a title insurance really be handy? And now is the time to bring it when we've institutionalized so many other aspects of real estate, including sales and marketing with RERA. What's your view on this? And I would love to have Naveen your view as well on this. Sai, if we can start with you and then Naveen.
Yeah. So I think the fundamental issue that, like I said earlier, and I think when the audio was lost, is title insurance in India. To my knowledge, when I was just checking the statistics, there were roughly only about 3 or 4 policies issued, and the two by HDFC or Go, etc. I think it will be a very, very fundamental. It'll be a great shift if title insurance becomes more popular. Again, for the reasons I mentioned in relation to rep and warranty insurance, which is then that you literally have uh, a lot of pain taken away from you in terms of future liability, costs, and expense of litigation and recourse. However, the problem, like always with title insurance, is while it is expensive again, when you have all known issues, for instance, if there is any kind of title flow break, there is a problem in the chain, in the tree, if those are going to be complete exclusions from insurance cover, then the question is, what are you insuring?
Yeah,
Okay, because I think if you ask Mr. Murli or Naveen, they'll tell you that, listen, these are things, I know that there's nothing else that is going to come out other than what I know. So that is a perpetual debate on really the utility value of title insurance, given the kind of exclusions and the disproportionate costs that we've been seeing in some of these deals.
Naveen, you have a view on this?
I think my personal view is that title insurance may not really, I mean, at least in Bombay, my exposure is restricted to Bombay. And I don't think so from a customer lens, it actually does anything because when a customer buys, there's already a banker plus a developer who's done all the title before he's reached that stage. So I think they really don't consider that as a risk. And even developers are now smart enough because they're putting in so much of effort and money in buying a property that they really don't want to take if there are ifs and buts. From an institutional guy who's looking at buying, he may consider this as a comfort. But generally, my sense is that the kind of premium, whatever I've heard a little bit about it, and it has these exclusions, it's not really there up yet for it to become a talking point today. I think it's still a few years away.
Murli, anything on title or on reps and warranties? You've done so many transactions, you've got investors in your parent company, and hopefully at some point, I'm assuming you'll take it to the public markets. But anyways, on title and reps and warranties.
Title insurance is most important one. I mean, wish it happens at the earliest. But the current scenario in India, structural reforms and Land Regulation Act, I don't think that will be real. So even insurance agencies will lose money, a lot of money. And litigation is easier to create in India. Hence, I don't see that's happening in the shorter span. But I wish something we make progress towards that. Reps and warrants is another most critical one. Developers are taking that risk of giving the reps and warrants, and the private equity investors are insisting on the reps and warrants. But developers will be able to manage quite a lot of things. So to the extent, they've been able to live with that. So, and today investors also have a clear understanding what is that they could live with that. So there's a better understanding which has come in now. That's where we are today.
Super. Rahul, one quick question, right? Whenever we talk to anybody who's talking about equities, and for the last or almost past decade and little bit more than that, all equity investors or those who play in the equity markets just hands down pushed away real estate. Has something changed there? Because in the last 1 month, we are finding that everybody is putting a buy, both on the listed and unlisted real estate, saying, guys, now is the time to buy it, both the brick and mortar side as well as equity. I know there's another company who's doing one more QIP. They did it just pre-COVID and they're doing it post-COVID. And money seems to be pouring in support of these companies. So what's going on? What are you seeing that's changed in the residential real estate?
I think great question, Shobit. Let's take a step back, and real estate, it does represent the fundamentals of the broader economy, right? From the global investors' point of view, particularly within the emerging markets, India stands out. Just taking the audience back to September or October when COVID cases were rising, everybody thought that India, perhaps could be most affected, within the larger economies, and given the per capita that we had, or we have rather, the scope was rather quite dim for India. But here we are, the cases have been under control. The large part of the corporates have dodged the bullet. And I think the proof of the pudding is in eating, as they say. If you see the corporate NPLs for the banking sector, it has been substantially under control, which has been reflected, let's say, in the top 3 or 4 banks in the country. If you see the earnings growth potential for the broader market, it stands out within the emerging markets, growing at 25-27%. Now, clearly, I think this is important because it leads to the wage inflation for the organized employees, organized sector. The businesses come back. People who have made money in the stock market, they divert the money into real assets, and then all sort of a phenomena kind of plays out. All this while, and I was asking this question actually to Anuj about 2 days back, as to what led to this transformation of the real estate sector, particularly the luxury segment or high mid-income segment. I think the change psychology of the home buyers is really surprised globally, all the investors, and clearly I think the sector has seen a lot of cleansing, and whatever has been left behind, as Murli was earlier alluding to, a lot of consolidation has happened. So the investors are seeing that, okay, fine, there is a latent demand in the sector which is going to be catered by stronger guys. The financing is available, the affordability is at the best ever levels that we have seen since 2006. So this is some sort of a pardon my exaggeration, but a consumption play that comes in at a substantially attractive valuation multiple. So if the corporate, I again go back to the corporate governance part, because ESG has been under significant focus. If the balance sheets are strong, if the balance sheets are clean, the intention is good, the track record is good, I think there's a lot of money sitting on the fences, which could come into some of these sectors. I'll just add one more point. If you look at the avenues of an investor, let's say 10 years back versus what it is now, both retail as well as institutional, I think it has opened up. There are today multiple avenues available to move the money around from one asset class to another asset class without much of a hurdle. and that actually could be fueling some sort of a demand recovery, which will lead to more investor interest.
Absolutely. I resound. I'm saying the customer feedback or the customer sentiment has changed everything, and they've come
Correct.
back. They've come back like how to start buying, and both at the top end and at the affordable side. We were very surprised with the way luxuries come back. The recovery was anticipated in the affordable side, but luxuries very clearly surprised us. Uh, Quickly, both Sai and Gautam, has the NCLT and IBC process helped at all in the consolidation, or that is just a sort of a bystander in all of this, right? Has that also fueled what Murli and Naveen both alluded to is consolidation? Has it really helped the sector? And also in bringing up the corporate governance curve. Sai, you want to go first?
I can go that. Yeah. See, I think. Yeah, so I think I really haven't, in my experience, haven't seen the IBC and the NCLT adding any sudden impetus to transactions. Frankly, obviously there are several opportunities that have been put out in the market. In fact, I remember there was a commercial office opportunity in Delhi where there were literally 33 bidders. Including a couple of our clients. But yeah, barring a couple of those, really, Shobit, we haven't really seen a major amount of positive because of the IBC coming into play in the real estate sector. And the second issues, I mean, there's this overall larger issue on how IBC plays out when it comes to a company with multiple assets, on whether you can only bid for one asset and then what happens to the rest of the company. Because typically a resolution plan is given in respect to the whole company and not an asset by asset basis, though there are some exceptions and one ruling of the NCLT to the contrary. So again, to that extent, we've really not seen much activity of these kind of stuck projects being taken over through the IBC. So in my mind, not a massive impetus, if you ask me.
Naveen, have you taken anything through NCLT or IBC? And likewise, Murli? I'm not sure.
We've looked at, hi, Shobit, we've tried to look at a lot of assets on the NCLT, but as rightly said, because of a company level plan, we really don't land up able to put the right value, because you are looking at assets of that company, and given the number of companies and how real estate has not been great on corporate governance, struggle, to be honest. It's a lot.
Yeah, I thought what will come out of this was the conflict between NCLT and RERA, and which proceeds. I think in real estate that's been the problem, saying that you put things in the NCLT, but RERA is standing outside or on the sidelines, so you can't really get a clean asset like in case of hotels or other industries, where once you go into NCLT. At the end of it, you're coming out clean without any past liability. Murli, have you had any good experience there?
Not a good experience so far. We attempted taking some projects through NCLT and not been very successful. So we dropped those proposals. We are currently working on one asset level in takeover through NCLT we're working on. So far, it has been going good. So once it becomes successful, then we may gain some more confidence to look at some more projects. Currently, a bunch of projects and all that, and taking over company and all that, I doubt whether today's situation is not in the framework is not in conducive.
So it hasn't really worked that much. Gautam, you want to say something on this? It's your subject as well.
No, our teams have been pretty active on the NCs, even some piece on the other one. But I echo the sentiments, of the other speakers here. I don't think it's contributed too much here on the topic that we are talking about. I think the only thing which is from a policy level was again interesting to me in the budget and not directly on real estate, but the whole push towards monetization by the government. Now that could throw up opportunities of real estate also coming up as part of that as the thought develops. But I agree on the NCLT and the IBC side, not much contribution.
Good. I'm going to, there are lots of questions coming up. I have one last question, which I'm going to just ask literally everybody to speak up on, and starting with Naveen and maybe Murli, let the developers take it first, and then maybe Gautam and Rahul, and I'm going to end with Rahul speaking at the end on, is the sales velocity that we are seeing just a pent-up demand, or is it sustainable? Is the big question. And what's your view on this? Murli, starting with you. What's your view? Is the sales sustainable? Because if it does, then it means a lot going for real estate. What's your view?
It's not pent-up demand, it is sustainable. It's just the beginning. See, COVID has taught a lot of lessons. One major lesson is that, go back to your basics. Basically, Indians, or savings is their mentality. They always looked at savings in the real estate or gold. So these two will be their permanent potential for them to have any asset investment. Hence, it is not the pent-up demand, it is the need for having a shelter which has come in now. In the last about 6 months, if you take a look at the first-time home buyers or big, not only first-time home buyers, the second home, third home, and all that as a security for their investment. So that has come in as a large scale today. Hence, I expect this momentum to continue for at least next 3 to 4 years time. This is not only this, coupled with various other support systems which has come from the government. A lot of things have been simplified. GST has been simplified, stamp duty concessions, and purchasing the property has been simplified. So government also, some of the state governments acted very well in the last 6 months time, and the central government support. All that has been helping in another way. Third one, supply is going to be very, very restrictive. So that's another most critical one. Supply is going to come only from few people today. Hence, I expect this demand to continue for at least next 3-4 years time is my call.
Excellent. You bring up some of the very interesting points. Naveen, you want to add something on sustenance of sales velocity?
So just to add to what he further said, like he said, there's consolidation at the industry level. Even for the purchaser, there are very few projects to look at. So sales is getting diverted to few good projects and few good developers. So sales will be there where there is progress and the brand is doing well. And there will not be any sales at projects which are having problems or the developer is having problems. So sale is also finding its which projects to chase. Over and about that, with FD rates being so low and people wanting to have security, plus interest rates of home loans being low, I think this is here to stay. Apart from whatever Murli said, which I fully agree with, but these are two things that I feel are also leading to a lot of sales. And I think here, at least for the next 18 months, sales are here to stay.
It's very interesting. You say that buyers have their own sixth sense and they're becoming much more intelligent. And there's a flight to quality, both in terms of projects and in terms of developer. And of course, interest rate environment is conducive. So I know this is not your subject, but still, I'm sure as a consumer, both you and Gautam can tell us whether you're going to buy that second or the third home if you already don't have one. Sai, I think you
can tell you, speaking for many of my colleagues, I was speaking to a couple, speaking for some of my colleagues, they've actually gotten, I know 4 of them who during the COVID time have bought apartments in Bombay. Can you believe it? So that itself is the proof of the pudding, right? And I think 2 things.
Yeah, you sitting in the heart of legality, so you know what's going on, and yet you're willing to buy it. So it's a big endorsement.
Yeah, and I think the reasons given are two basic things. One is, of course, as I think Naveen very rightly said, I think today it is really the confidence in the developer and the ability to deliver. Okay, and deliver a good product. It's not that you just dump any kind of product on the consumer. That is one. And secondly, as one of the speakers rightly said, the stamp duty reduction has been a major impetus given ticket sizes in Bombay. So I know 4 of my colleagues alone who've in the last 3 months bought apartments. So I think there's enough proof for me, frankly.
So super. I mean, I think there's been tremendous support, especially in Maharashtra, from the government as an exceptional support. I'm sure other governments are doing well as well, but Maharashtra has been outstanding. Gautam, anything from your side on the sustenance of sales? And are you also your organization is much larger? You're seeing the same sentiment in your office?
Shobit, I'm an eternal optimist. Yeah, I agree. I think I'll just add a couple of more specific comments and maybe break this down between commercial and resi. I know your questions are primarily on resi, but as we all know, commercial was probably reaching or heading towards a bubble. At least it's where it concerned A-grade commercial, and where COVID has, I think, contributed, if I'll say so, has leveled off, the supply-demand piece, and it's got the market a bit more stable and mature. On the resi side, I think, as the developers rightly mentioned, the choice for the buyer is getting limited because there are going to be a handful of developers who are going to be on the top end of the K curve. So I certainly see this demand staying. But the only caveat, we all know, real estate moves with the economy. The Indian economy is rebounding back, and I'm optimistic of that, and that's why I think the sales will also rebound and continue. But if that were to take, obviously that is repercussions, and things could move southwards again. But that would be a temporary phase.
Yeah. So you're saying ultimately there is a demand that's moving towards residential, is what I hear. And of course, Rahul, you are sitting at a 30 feet view. You're not directly involved with real estate. What's your view of both resi and office now that Gautam is thrown in office as well?
Yeah, so I think first of all, on the resi side, just speaking from the macro standpoint, I think there are solid enablers out there in the system. Of course, the interest rates are at the rock bottom levels. Even if inflation moves higher, I think there is enough slack in the system which will keep the rates low for the consumers. But of course, interest rate is never the only enabler. It is essentially the job creation and salary increases and the prospects that one sees for himself. And then while Goldman estimates 13% growth next year in GDP in real terms, fiscal 22, pretty strong number, I would say. The year outwards, I mean the year out, the prospects is needs to be seen how it plays out. So I would say beyond the next 6 to 12 months, the jury is still out there. We need to see what kind of a job creation India is able to generate and what kind of quality of jobs, we are able to see. Of course, certain micro markets, as our research team tells us, have done phenomenally well. For example, Hyderabad and Bangalore, which are seeing some, good quality job creation. Tech has bounced back pretty strongly. And India actually has moved up, multiple notches in terms of the quality curve. So that's on that. On the commercial side, there was an expectation of co-working space to do well, but the work from home is here to stay. It seems anecdotally, I'm hearing about certain multinationals cutting off a quarter or third of their workforce and permanently moving them to work from home. I think that area is yet to be seen. Apart from that, the office space, you would have already heard many multinationals from Americas are still looking to expand in India. So I think commercial, our research team is still quite office space, they are positive. And resi does look good for the good players in the near to medium term, but beyond that it really depends on macro. So I would say the jury is still out there. I would hedge my bets there.
That's fantastic. You've kind of summarized what I wanted to say. Is that look, post-COVID, resi has surprised all of us. It seems like it's here to stay. near to medium term. Lots and lots of reasons, including customer becoming very sort of intelligent. I don't know how, but they don't look for balance sheet, but they get a sense of who's going to survive, which projects to pick up, and they're picking up really good products. And of course, the markets, the government, and the developers themselves are stepping up to make it easier for them, and perhaps not a repeat of the last decade where they all suffered at the hands of few developers around the region, which has all taught us a lesson in corporate governance. With that, I would probably like to stop, and there's 5 minutes left in case, Ronit, there are any questions from the audience. We'll allow them to have the privilege to ask the panelists and the experts anything, Ronit. Oh, I know Gautam.
Yes, sir, I am just checking. Just a minute, sir.
Yeah. Gautam had to leave, so he's of course gone out, but the rest of us are here. While Ronit is checking, I just want to check with Naveen. You also have invested in offices in the heart of Bombay. Are you seeing any tip-offs, or is it growing? Because there's a big debate and the jury is not out, as Rahul said, whether the office demand is shrinking or is it staying put.
It's giving us a confused signal at this point of time, Shobhit, because we've done new transactions also after COVID. We've lost transactions in COVID. We've got people coming back asking to pre-terminate even in lockdown. I mean, even in their lock-in terms. So we are seeing a bunch of everything. I think it needs more time for it to settle down. But I can tell you one thing that, we have close to 120 tenants. We've spoken to all of them. Are you looking at downsizing your space? Are you looking at expansion of space? Everybody is in a status quo moment at this point of time. Nor are they looking at expanding, nor are they looking at giving up space. So it's I think it's a wait and watch state at this point of time. And there's a lot of relocation happening. A lot of companies who were in very densely populated buildings are looking at a boutique-ish building. A lot of people who were in, grade A BKC building are looking at moving to Andheri, because I think so. It's a mixed stage at this point of time. I mean, I get both kinds of signal of people saying that we will reduce space, and from there people actually saying that we will need more space because we want to spread people out.
Yeah, so you're saying different people are behaving differently. Jury is not out on offices, whether they're going to expand or shrink. I was looking at some of the announcements that have come in of the listed REITs. It seems like some amount of vacancies starting to get built up, especially where renewals are concerned. While they're doing fresh leasing, you're right. Fresh leasing is also happening, and many of the renewals are not happening. So yeah, it's a mixed bag at this point of time. Ronit, any questions? Sorry, somebody was, Rahul, you were saying something?
Yes, sir. There is one question which is coming, sir. With distress funds charging top brand name like Shapoorji at a coupon rate of 23%, what measures can the developers take towards negotiating a lower debt rate?
Murli, you want to take that question?
Not able to understand the question.
He's saying, how can we bring down the cost of capital? I think that's the question. And I think he cited a corporate who's perhaps borrowed for different reasons at that pricing. It's the wrong example, but I think what he's really saying is the last mile financing seems to be very expensive. And can that come down, or will that come down?
Yeah, it's a big challenge to at this point of time. And as you rightly said, NBFCs, not much fund available from NBFCs to lend. Hence, the scarcity of capital available on that space is creating a huge problem now. but probably once NBFC start getting good liquidity, this will come down is my view. It has to come down. Real estate cannot survive with this high cost capital today. Hence, it has to come down. So I'm sure in the next 2-3 months time, there will be some solution.
I'd just like to add there, I think the issues between those that are bankable, I think the interest rates have started to come down. I think in this particular case, there are other challenges, and hence, he's in a little bit of a, they're probably sort of buying a runway till they're able to stabilize themselves. Probably the wrong example, but yes, I agree with Murli that the last mile financing cost is still high. Until NBFC crisis is fully sorted out for real estate, at least, I don't think there's a short-term solution to that. Rahul, any other last question? Otherwise, we are nearly done. We are sharp on time. It's 3:30, and I'd like to thank our panelists. All of you, thank you very much for taking out this hour and coming together. I know we had a day job, so thank you so much for coming in and sharing your views. And thank you, CII, for putting this together. Thank you, everyone. And we'd like to end the panel now.
Thank you, Shobhit, and thank you, panelists, for that excellent session. Ladies and gentlemen, we will now be beginning with our next panel discussion, which is on digital adoption, indispensable for real estate sales and marketing. The session will be moderated by Mr. Rahul, Chief Business Officer, Hangar Rock Residential. May I now invite the esteemed panelists, Mr. Anil Nair, CEO India, VMLYNR, Mr. Shajay Jacob, MD and Country Head, Apna Complex, Ms. Reza Sebastian, President, Residential Embassy Group, Mr. Gaurav Jain, Head Growth Business, Facebook India, and Mr. Rajiv Dash, Head Sales and Marketing, SD Corp. Welcome, panelists. May I now request Rahul to kindly take over the session. Over to you, Rahul.
If you can give me a minute, let me just settle my system.
Yes, absolutely.
Hi, Sanjay. Hey, Rajiv. How are you? Hi. Good, good. You came back from Dubai, but you're not met us. I think I've been more in Bangalore than in Dubai. Okay. Okay.
Mr. Rajiv, hello, Mr. Rajiv. Can I request you to kindly lower your camera? Your face is not clearly visible, sir. Yes.
Is it okay now?
Yes, sir. Perfectly fine, sir.
Okay. Thanks. Thanks. Thanks.
Hi. Good evening, everyone. Am I audible?
Yeah, we can hear you.
Hi. Superb. Thank you very much. Thank you, CII, for this fantastic session. I think this is one interesting panel. What we have, we managed to pull in a different perspective, right, from the developer side to the media side. To the AI side, and of course, the entire CRM which I've been talking about. So welcome you all. We'll start the session. We have seen the last level has been a joyride for all of us, especially on the digital front. I mean, two things became very difficult sitting at home and when we were in lockdown. One was, of course, the maid of the house when they will come back and resume the service, and second was Wi-Fi, wherein all our business operation interaction was already happening at once. So there has been a behavioral change which has happened in all of us, which we have witnessed. Mobile as a device has increased its consumption. OTT platform has seen a huge spike in the overall approach. In real estate, what we have observed at Adrock Digital as an agency has started contributing to 35 to 40%, which was otherwise around 20-25% of that. So there has been a sea change which we have seen in digital. And thanks to all the experts who is there on board, I would love to have your views as well. Starting with my first question, probably we can start with Anil and later on with Gaurav also. I would love to have your views in terms of how the Indian real estate sector has actually traversed the journey of offline to online post-pandemic. Also, which business functions have we seen a digital adoption?
Fantastic. Thank you, Rahul. Hello, fellow panelists. And it's amazing that we are using this medium now to have a conference where otherwise we would have all been traveling. I still remember the last such conference we attended was a physical event in Kochi with Rahul. So much has changed in the last 1 year. It's interesting that you asked this question. The pandemic has literally been a tipping point for many, many categories. And one really interesting category that I always wondered about was the real estate sector, because it is so much of a intermediary driven touch feel kind of a space. And when I spoke to my counterparts in the real estate space, obviously, like most other industries, the first few months were a state of shock, and given the various lockdowns and the uncertainty that was there. But as I speak to them, towards the latter part of what is happening in the pandemic, one, I hear that consumer interest in the real estate sector is coming back. People are, there is a desire shown by people to come back and look at projects. And more importantly, I think people have realized the importance of having a place, having more space, having a good enough space for families to kind of conduct their business, because most people today are working from home. And given all of that, I've also seen, again, most of my peers from real estate adopt digital in a really, really interesting way. If I were to, summarize this in terms of whereas most of the investments gone, one has been in the experience sector, which is how do you still give customers the same physical touch and feel experience while sitting in the comfort of their homes. That's number one. The second area has been in the entire search space, which is how do you make access to information that much faster. The third space is, obviously the conversion space, which is how do I ensure that I close any potential leads? How do I reach leads, and how do I kind of close those leads as quickly as possible? And last but not the least is in the entire data-driven space, which is how do I get first-party data so that I am able to kind of create a picture of my customer and personalize the offerings to them. So these are some of the areas that I've seen traction, and all of them are very, very serious and things that can really impact the sector.
Interesting, Anil. I love the way you summarize the comfort, the access, the lead gen, and the entire convenience factor. Maybe Gaurav, I'm sure you must be there at the nerve center when it comes to the entire digital transformation which is being happening. What are your views on the question being asked?
Sure. Firstly, thank you, Rahul. I'm glad to be part of this panel and giving my 2 cents on what is happening in real estate, especially from an online pivot point of view. And hello to fellow panelists. Rahul, so over the years, we've seen developers realize this need to reach the potential buyers through a judicious mix of both offline and online campaigns, right? Now, think of early 2000s, real estate sector was basically offline. However, over the last decade, we have witnessed a move towards a mix of this. As the Indian real estate players showed an interest also in developing projects that create a sort of a global market. Now, you could argue this is the adoption of several digital first initiatives, even pre-lockdown. But I would say that was limited to, let's say, online listing of properties, virtual tours for some luxury projects, etc. Now, with the onset of the global pandemic, I think this shift has accelerated, thereby setting the stage for reality players to sort of acquire digital products. The preference of the new age home buyer has fundamentally changed owing to the crisis, and it is imperative for the developers and the aggregators to adopt newer technologies that will ease the entire home buying process, right? For this new age buyer. And to bring all this together and present it in the most dignified, most accessible manner, online tools like virtual presentations, drone view tours, virtual tours, webinars like we're doing now emerge as the most cost-effective measures. Now, our online journey for any real estate developer or aggregator essentially begins with, simply by a web page. It may be a Facebook for business page, it may be an Instagram for business page, and then using advanced and personalized communications to reach out to the customers that matter most to them. So right from lead generation to video views for increased awareness, to augmented reality, to now chatbots, right? The investment that we are seeing made by the real estate players online has seen an accelerated shift, especially post the pandemic. And I only see it growing in the coming years.
Interesting. I love when you talked about new age process, how the technology has facilitated the entire journey of real estate buying, and the advanced personalized viewing. It's so addictive. I'm sure the entire time spent on Facebook is growing and has grown almost for 40-50% or so. Coming to Rajiv, you have seen one trial, I think 3-4 years back in your earlier development Tata Housing, wherein one of your projects was being launched on digital front. So you have seen partly. What has been your experience this time?
Hi Rahul. Rahul, I think it's been a journey for digital. If you see, digital started with a brand building exercise where we used to think that digital will target certain segments. Then from the brand building exercise, we went to the lead generation process. So a couple of years back, we were thinking that, okay, brand building is done now in digital space. Now talk about lead generation. So we started talking about CPL, what is your CPL, what is the digital CPL. So we started comparing the CPL aspect. Now if you see, last 1 year or 1.5 years, it's about creating experience. What Anil was talking about, creating experience, that is what has started happening in digital space. And because of the creation of experience, I can say that some of the projects have started marketing with digital first. And we have started doing some projects also in Bombay, which is now digital first in terms of the media planning. And that is the great thing for digital, mainly because it's not only the lead generation, but also digital is a two-way communication now. So when you think about digital, don't think from brand building or lead generation, but please make it more engaging with social media aspect. I think that is the good thing about digital is that it's an engagement process and it's a two-way now. Not only lead generation, but have an engagement process with social media aspect, which is your influencer program, engage with the customer. I think that is the great thing about digital now. It has gone beyond the limits of being a lead generation, brand building, giving you sales revenue, and the referrals now. I think that's a good thing about digital being there.
Interesting, Rajiv, when you touched about digital first or digital only launches, which marketers are now super confident that the launches can happen on digital itself. Coming to Visa, Embassy has a huge legacy. It's a big brand, and I'm sure there will be certain, certain opportunity or pressure in terms of how to internally convince the entire management in terms of here is a transformation happening. There is a huge demand and customers are now available on digital. What has been your journey in the last 11, 12 months to promote Resi projects or a portfolio in digital?
Thank you so much, Rahul, and a very warm welcome to all the listeners to this panel, and welcome to the other panelists as well. For us at Embassy, I think, this constant struggle, I think, between the CMO and the CFO is real, right? Why are we spending our money and what do we need to spend our money on? So over the last 12 months, a larger part of the marketing budget has been extremely focused on performance-based marketing, like lead generation, for example. So if you take that when we started off with the pandemic and all the crisis that stood, we mobilized our entire digital platforms to engage in conversations with the audience that would be organic, what we stand for as a brand, and furthering our corporate responsibility. But once that exercise was done, we kind of started focusing on our performance-based marketing, which helped us to compare our spend impact across the media, analyze the brand impact across the consumer's entire decision journey, right? Allocate our campaign resources more effectively, tailor content. We have also found out that having this very unified kind of a customer view has helped us to have a very clear view of the return on marketing and spend, and provides that very important bridge, like I said, between the marketing and finance team. How much is the money and what is the money getting us? So this very data-driven perspective on marketing performance has allowed us to develop more thoughtful and aligned strategies for the marketing spend. But like my fellow panelists have been saying, I would say that the future of brand management is also about connecting that brand experience with customer experience. I think we are focusing less on clever media planning, but more on identifying, solving problems, focusing on the art of brand creation, on storytelling, focusing on journeys. We realize that the customer experience today has to be delightful, it has to be personalized, it has to be relevant, and it has to be empathetic, all at the same time. And I would say that there are three things to this strategy. There is just too much information out there. So it is important for a developer to create a very strong and recognizable brand, because that's what increases customer confidence, it shapes the ownership experience, and it influences the buying decision. Also, secondly, I would say it is about designing a very effective digital customer journey based on high value content, right? So that strategy then should be scalable, it should allow for cross-sell, it will require lesser overheads and render a lot of real-time actionable insights. But more importantly, marketing, digital or otherwise, has to be coupled with strong distribution. For instance, today, Embassy, even though we rely a lot on marketing, channel partners continue to contribute over 60% of our business. So while we create all the art of storytelling, branding online, product innovation, stellar service during construction, handover, and most importantly, quality products, timely delivery will define and build your brand.
Interesting, Lisa, how you started with completely on performance and ROI, and then quickly shift gear in terms of what is relevant for customers. I think, Shajai, while all the panelists have been talking about the primary purchase, how to lure customers on, persuading them to buy a residential as a space, you have a different, relatively evolved format. If you can tell us a minute about the platform, because it's relatively a different genre of real estate, wherein your platform is actually customers are living, breathing their actual lifestyle in the residences which they're living in, whether it is facility management, whether it is the way the society has been managed, and so on and so forth. So probably it will be good to hear you how the Apna complex as a platform being built upon, and what has been the transformation which you will see in near future.
Thanks, Rahul. Thank you, fellow panelists. And I have two of my favorite brands and developers on this panel. One is, of course, Embassy and SD Corp, and two good friends also on the same panel. Great. I actually want to step back a little bit and give a few comments on why digital has been so important. And, I've lived various lives, and Rahul, you've been witness to that. The life of a marketeer, life of a business guy doing cross-border, and life of a tech specialist now, just embarking on that journey. So when I was a marketer, digital used to form maybe 10 to 15% of the entire marketing budget. It was good to do, right? I think that over the last decade or so, come to now, I think the rest of them have become good to do, where digital has to form a large part of the plinth of what we are communicating, what we are experiencing, what we are getting the buyer to discover. So marketing budgets itself have turned topsy-turvy, which is, and probably also because of the reason why it's easier to justify what you're spending on. And there are clear ROI measurement metrics. Of course, Lisa and Ravi both touched upon that, right? And I have lived this entire journey, and I see this entire change, from my past life. For a business guy who's based in Dubai, when I see, the kind of journey that the consumer had to live and selling to such consumers, there was always a touch and feel involved pre-COVID. Huge touch and feel. There was somebody, even if you discovered the customer through an online media, the customer had to, visit the site to actually, buy the product, or at least get someone to visit the site, which today has got completely minimized. Because today with, for example, in Bombay, with the stamp duty, time being on a ticker till 31st March, most consumers are saying, to hell with seeing the apartment, let me just get the apartment and site visit done through a Zoom call, hold the camera and the phone, and, developers are coming out with innovative thoughts on how to entirely re-engineer the entire experience. And of course, that is really changing the entire mindset of how people perceive and buy property, right? And so, in my opinion, that site visit itself will, disappear after some time. The fact is, this is completely going to get disrupted by digital. So whilst the entire discovery of the buyer and the experience of selling the product itself has gone digital and accelerated big time, right? It's the end journey of the conversion or the purchase which is now being disrupted. And I think, India is going to be at the forefront of this exercise, like China has always been, right? Coming to how the entire buyer's journey post his acquisition, and that is where Apna Complex, forms a unique, space, which is to say that let me automate the buyer's life post his acquisition in the gated complex. So whether it is, actually ensuring that his maintenance payments, earlier what maintenance payments, bills used to go by an email, sometimes the email used to come, big bills used to be sent across, slipped underneath the door, somebody had to go write a check, send it to the Dropbox of the society, or make an NEFT payment. All that is now being disrupted. The fact is that through such, apps like Apna Complex, one can actually make a payment directly through a payment gateway, and boom, the payment is done. And it's like a 5-second job. Communication on security and notifications. One doesn't need to, get to the intercom. So your traditional phone lines, every time someone moved into a new home, and Riza, you probably agree with me, the first thing is, mera intercom kahan hai? Where is my intercom? Who's setting up my intercom facility, right? That intercom facility is vanished because such apps take care of the intercom. You just need a notification, whether it's Zomato coming in, whether it's your Uber car which is coming in, or whether it's your, maid who's actually entering the society daily. And then you don't need to keep track on a roster as to how many times she's entered, not entered. The app takes care of it all. Plus complaints. My plumbing has leaked. The plumbing has leaked somewhere in the building. There is seepage as soon as you enter a new apartment. A snag list is created. Earlier when we used to move into a new apartment, we used to create a snag list. Like there's the 30 things, you need to go chase the developer, and the developer then gives it to a third party. Today it's all recorded on an app, and every time something is sorted out, there is an automatic tick which is put in, right? That then online polls, whether you should have a tennis court over there, whether you should have a squash court, or whether you put a cricket or a football field in the middle, all of those polls can be run, whether it's even polling on getting a management committee adopted. So all of these things, automating the life of the entire buyer post the purchase is what where the next level of disruption is, and I'm really happy to say Apna Complex is at the forefront of it. So that is.
Super. And I love when you share a glimpse about your Dubai journey, how NRS has been looking at, and also quickly talking about how the societies is being managed in this new format, which is absolutely convenient, rich on data. While I'm looking at the screen, I'm seeing, each of you are sitting with tons and tons of data, which is my next question, and I'll pick brains of Anil. Most of the marketeers, most of the developers are sitting on tons and tons of data, whether it is prospect, whether it is people who are not interested, people who are interested, people who have booked, people who are leaving, so and so forth. Majority of time, the developers struggle in terms of how the intelligence can be built upon on that. You are in the cusp wherein the entire predictive buying, programmatic, and everything can be worked upon. I would love to have your views in terms of how the businesses should be looking at the data in more evolved manner.
Sure. For a business which is about people, I think the greatest tragedy is the fact that great first-party data, which ideally most of these brands should be having, unfortunately end up being discrete buckets where with every launch, with every campaign, a bunch of data gets obsolete as opposed to building on it. So first piece is, creating a collection, data collection methodology and the structure and processes within most of these organizations. Now, the big question people ask is, that means that there will be a huge amount of investment involved. Collection of data is an attitude. If you want to do that, you can even maintain it on an Excel sheet. But today there are lots of formats, structures, and platforms available to kind of help you even maintain some kind of a database. Once you do that, data needs to be refreshed. And again, you need to hire within marketing a certain set of people who can kind of do that. But most important is the application of the data that you collect, because one, it helps you in your marketing planning, in cohort creation, in kind of ensuring that the next time you segment and target, you're doing it out of some kind of native intelligence and not out of gut feel or competitive pressure. That's point number one. Point number two is it helps you in your media targeting in terms of the ability to kind of create lookalike target audiences and stuff like that. But most importantly, to what Shajay was speaking about and stuff like that, today we are talking about a connected consumer experience, and any prospect can be tomorrow's consumer. Any prospect's relative can be our consumer. People are talking about concepts like customer lifetime value. Just because they bought, earlier most Indians just wanted to have that one house in their lifetime. Today, people are looking at rental differently. People are looking at buying multiple houses, their second home and their third home. So it is. I genuinely feel that though there is no direct ROI from first-party data and the processing of the data, I believe that this is an investment that people need to do. And with all the wall gardens out there who are trying to kind of, and all the privacy laws that are coming in, I advocate and evangelize this with most brands, saying have your own first-party data. It will help you in the long run.
A lot can be done. I think you touched upon the point. The better the understanding of the data, the traction, the ability to maximize the ROI, the engagement is much far more superior. That's the key takeaway. I just wanted to go to Gaurav. I think you are almost having a global exposure in terms of various countries, how the Facebook is being operated. In terms of the last 11, 12 odd months, there you have seen the huge paradigm shift in terms of Indian market, whether it is any other sector, including real estate or so. What has been your advice or observation, etc., when we looked at developed countries like US, UK, etc., vis-a-vis India? Are we good? Good to compare? Are we unique, different? What has been your observation on that front?
Yeah, that's a good question, Rahul. So I was reading this Morgan Stanley Digitization Index, right? And this is across the globe. And what they clearly pointed out was that real estate is the second least digitized industry world over. And I believe India is no exception to this, right? So as a sector, I think this has been one of the slower adopting. sectors overall globally. But let's talk about between India and the developed world, right? So while some of the developed nations are adopting, cutting-edge virtual tour platforms like, Matterports of the world, India is catching up well, let me say, to the overall digitization trend. See, one thing is for sure, today's consumer is online. Every moment you as a developer or as an aggregator are not reaching out to them, someone else is. So it is only a matter of time before, it will almost become a no-brainer for anyone and everyone to reach out to consumers where they are, where they are consuming their time. Specifically, Rahul, I think there are some trends we see picking up in India, which we already see globally. One, like I think my fellow panelists spoke about, the consumer journey moving online. And that is across all stages of the consumer journey, right? Right from, are they interested to buy a property in a certain country or continent, to the actual, virtual site visits, etc., etc. So consumer journey moving online is one. Second one that I see in India is what I would call sort of automated marketing strategies. So let me explain that, right? By going digital first, developers now have an opportunity to develop personalized real-time messages through their prospects. And a well-rounded automation system has not only magnified the customer experience, but also streamlined the marketing efforts, and effectively giving the marketers a 360-degree view of all the data points in their marketing campaigns. We also see an increased adoption of CRM systems, something which may seem very basic to all of us on the panel. But trust me, we are at that stage. Even the adoption of CRM systems is a big milestone. And as we all know, they help in tracking the milestones in your sales funnel, tracking the contacts, following up with clients. The third one, Rahul, is an interesting one and a new one, right? A very nascent stage in India, is what I would call securing the post-sales process online. So think of things like closure of deals, paperwork, payments have traditionally remained completely offline. I also expect them to move online, and along with loan processing and the entire payment space. Developers will naturally start looking for secure gateways. They will use video conferencing solutions to ensure smoother transactions. And all this enhances consumer confidence and trust, right? Hopefully, I think going forward in the very near future, we may have to do lesser paperwork and a very simple two-tool documentation when buying a home online. The last one, and again, this is again very picking up very, very sharply in the India market, is what I would call influencer marketing, right? Traditionally, you can see a lot of CPG players, the tech telco brands in India utilizing this. But I think there is a lot of scope for adoption in influencer marketing in real estate in India. And I can almost say that it will be one of the most crucial digital marketing trend that one can implement by a long shot.
Interesting. So we are not that bad. That's what you're hinting at when it comes to adoption of digital as far as India market is concerned. And because it's a comparison happening on the global front, I would want to go to CII in his earlier avatar where he was driving the entire international market for Analog as a business is concerned. Shajai, you were at the tick of the things wherein digital as a medium was hygiene for NRI purchase, correct? Now, when we've seen the entire transformation of resident market, what do you see? Did NRI have an edge on buying? Did they see a huge opportunity in Indian market during this time? What has been your observation as far as NRI buyers are concerned? Sorry, Shajai, you're on mute.
Sorry, Rahul. I had raised my hand because I wanted to, say something in aid of what Gaurav had actually said, which is that possibly the entire payment and the entire collection for the consideration for an apartment can be moved online. Which is interestingly, Gaurav, we are working at Apna Complex with a leading developer in assimilating the entire CRM system onto the application, so that it becomes a buyer's application and then transforms naturally into a apartment owner's application. So the buyer's application will actually prompt the buyer and send notifications as and when there is a payment due as per the building slabs being completed, or there's a timeline for payment if there is a loan to be taken. So it actually seamlessly will integrate with the CRM system of the developer post-sales perspective, and payments can be made through a collection gateway, which is integrated at the back end through the NEFT at the buyer's bank account. So that's anyways, as you rightly prompted, it's anyways started in India, right? And so that's a big sell-through. And then of course that has a natural segue into the entire resident application. But yeah, to answer your question again, Rahul, we're seeing digital becoming not only hygiene but mandatory. Earlier, and our conversations, Rahul also, is a large digital, aficionado, and obviously he spearheads a large team of digital professionals, and obviously the demands on digital to generate business is extremely high. And post-COVID, I mean, it has become mandatory. There is no business without digital. One has to, abide by digital, and digital in its various forms, and it's not just, SEO, SEM, but the other aspects of digital also, whether it's social media marketing, whether it's the entire lead generation, whether it's even Facebook. Facebook has become a huge source of digital discovery for the buyers, right? So, and that clearly has become, the process of acceleration of digital as a lead discovery and conversion mechanism has become even more important. I was reading in the CII survey today, that the fact is that the maximum buyers in post-COVID have been in the 40 to 90 lakh category. And this is that category of affordable housing which has actually prompted the resurgence of real estate, and of course luxury, not to take that out of the question. But this affordable section does look at digital as their first search option. And if a brand is not present online, whether it's through a channel partner, which Riza had said, the channel partners, and we happen to be a channel partner, a big channel partner, right, in the NRI market. So as a channel partner, if we are not on digital, and the developer is not on digital, we might as well forget about the customer. I mean, the customers are going to come to us. So extremely high, moving on from hygiene to mandatory. And for those who are not there in the digital game, I think business is going to become extremely tough.
Rahul, can I add on to what Shajay actually mentioned?
Yes, please.
Okay, so in 2018, we launched an online portal for the first time in India when we launched a project called Embassy Edge at Springs. This was designed for the millennials. It was India's first Alexa-enabled homes. So here we were designing a product for people under 35 years of age. And we had to figure out how did they consume information, So research showed that about 56% identified online as their main source of information, and just 16% looked at print. Google and Facebook together account for about 70 to 80% of India's digital advertising. So the entire marketing strategy actually moved online. Now I'm talking 2018. Not a single brochure was printed. Now this portal not only enabled online booking, but catered to entire post-sales management with features like, allowed customers to manage their accounts, track construction, manage their documentation, raise tickets for issues, real-time virtual support. And by downloading this app, they could stay connected through their journey with us. And the products of phenomenal success. But the way the digital footprint of India is moving is extremely interesting, because we are saying that 200,000 Indians go online for the first time for every day that passes. There are over 500 million active internet users in India, which leads to a humongous amount of digital footprint. And what this is allowing us to do is to deep dive into big data and derive knowledge about consumer behavior, not only from from a buying perspective, but even for us to understand how are we serving our potential market? How can we design products for the future? So this entire aspect of tracking user journeys, calculating ROI, helping with budget optimization, what is the health of individual campaigns, all that is being made possible through digital. But again, I add on to the fact that companies today are investing a lot in technology, but a lot of the technology is remaining underutilized because they're not investing in employee capabilities. So, the companies who are investing in technology also need to invest in the employees to reap the benefits of the technology that's being made available available to them. And this will have to be aligned in order to achieve the sales and the transformation that we are ultimately looking for.
Rahul?
Interesting, Riza.
Rahul, if I can add one point, Rahul, at the end of the day, real estate is a high ticket purchase and very highly involved category. So your digital cannot be compared with the other categories that we have seen in terms of penetration. There are two buckets to the digital. One is that, okay, you are creating leads. Lead generation is part of it. Yes, that you cannot ignore. But are you getting sales closer? That is the aspect that is now we need to talk about. I think lead generation, CPL, digital first, that's been done now. If you remember when we did that project launch through Facebook 5 years back, Anil was part of it. And that was a kind of case study in the industry that somebody did a project launch through Facebook as a social media. And if you remember, that was successful. It was very, very successful. We did 250 sales in 10 days. And that's purely, if you remember, one of the insights that came is because it was from a brand like Tata's. So digital picked up not only leads, but sales. So that was a time when the brands used to do that bit of work because of the credibility. If somebody is in Dubai or US, he'll pick up a brand that he is known to, and he'll have that credibility with the brand. But today, that has changed. It's not only brand, any good product, good project, who has that kind of track record of delivery and execution, which Riza was talking about, they have started getting the mileage from digital, not only lead generation, but slowly getting into the lead closer and sales. That's one aspect. The second aspect that I want to touch upon was that digital works when your distribution is there. Real estate is not about getting only, because as Riza was also talking about, 60 to 70% sales comes from channel partner, right? So it's not only that you do a brand building, direct newspaper, digital ad, and your sales is done. If you have to look after your distribution today, once you start your digital campaign, your channel partners are asking for the digital toolkit. It's not that toolkit, it's a digital toolkit. You need to give them that toolkit that they can also start activation. And that is the best thing about real estate today, is that all your channel partners are geared up. They want your digital kit so that they can start their activation. And if you see in totality, the developer, the marketer is starting the digital activity, your channel partners are starting the activity. So entire surrounding is created. So if you have to ask which other medium will give you this kind of surrounding, I don't think anybody like a print or a radio or outdoor can give you that kind of surrounding. Today, because the channel partners also are geared up, they are investing on digital flow. So you are getting the mileage. So it is a good initiative by the developers to get the channel partner also into digital medium. And we have started a program where we started doing a training program. How to advertise in Facebook and other mediums. We give that training program to the channel partners so that they can start activating their lead generation process. And that's working for us. I think that is where the future is going to move. One is that your micro targeting, when we can do a lot of micro targeting about the profile, whether it's to AI and ML, that is working. The programmatic way of doing lead generation is really helping us, because that is where your lead, the cost per lead is coming down. If your programmatic is working well, your cost per lead is coming down, and you can create more leads with a conversion ratio of 2 to 3%, you are getting sales and your ROI works. So that is where today the digital medium is more efficient, because you can track it, you can evaluate the quality of the lead, and then take it to the site visit and then close it. So if you see the funnel, it works well for a digital platform, because you're creating leads, qualifying it, taking them to site visit, and close them. And after closing, if he is happy with the entire customer journey, he is giving you a referral. So your ROI is maximum at the digital front, and that is where it's going to be the future.
Rajiv, loved your point, especially you come up with these nomenclatures of broker toolkits and why sales is important and why brokers or channel partners are going to be the integral part of our digital penetration, because at the end of the day, they are the brand ambassadors on that. Talking about brand ambassadors, I know Embassy as a group or SD Corp as a group has a huge legacy, and a large image management is being required for such an intense category like real estate of ours. How do you see social media or the entire online reputation management should be looked upon when we know for the fact that it's going to be hygiene when the customers or existing buyers are going to judge or build perception about developers brand on what content is available or what reviews or whatever has been shared about the brand on the online front. Lisa, you want to take that, or Rajiv Vijay?
See, Rahul, my point of on the reputation management is that whether you love it or hate it, you cannot ignore it. So you need to be there, India, because that's the best tool that you can engage with a customer. Your one positive word of mouth in social media helps you to get that lead process more efficient. You know, it's the best thing that will happen in is that it's communication. I do an advertisement, whether it's a lead generation, a display ad, I multiply that kind of amplification through social media, and that helps me. If I don't do social media, I do only lead generation and display ad, my amplification will not be there. So my site working, if you'll see, it will not be so much. But when I do a 360-degree approach within the digital platform, then I start getting the leads and the walk-ins coming to the site. And that is the power of social media that you need to tackle. Yes, there is a part of it which is you need to handle the reputation management. Be clear what customers are talking about you. You need to take it up depending upon the product issue talking about, or it is a brand image sensitive. I think one thing is very clear that one need to be very responsible in terms of responding within the timeline, making that you everything, whether it's a product issues or a brand issue, whether it's engineering team has to give you the response or the legal team has to give you the response, get the right response and send that response to the customer. And it's the only way that you can tackle is that customer, nothing else. It's that just respond to the customer.
Interesting. Riza, I would love to have your views, how you have been managing it.
So here I would say that, there are essentially three broad trends that we have to look out for to add to what Rajiv was saying. We have to ensure that our communication remains very individualized, you can't have mass communication going out. Like we said, it's high involvement product. It's very, very customized buying. There is a usage experience that is being provided to the customer. So the involvement of AI, etc., and the use of social media is very rapid, but we need to ensure that the customer journey remains extremely personalized. There is a huge role that is being played by back-end functions like marketing, sales, service, and even internal functions like operations, finance, human resources. So we need to provide a very seamless and omni-channel experience to the customer. So that integration of all customer-facing roles with the back-end roles is extremely important. We also need to make the communication very interactive. Customers, marketers will very quickly substitute direct and physical interactions with digital ones. So we need to find ways to connect, engage, and bond with customers. At Embassy, we say that while we say 60% of our business comes from channel partners, our customer referrals and loyalty programs give us about 25 to 30% of our business. So we need to ensure that these interactive experiences, even though if they're delivered digitally or face to face, are actually the powerful differentiators for the winning brands. So we need to create that very, very sustained competitive advantage, involve interactive and immersive elements, and all of this will combine to form a part of the marketing strategy to engage with customers throughout their journey with the brand from pre-purchase, purchase, use, and post-purchase stages.
Interesting. And as we are moving ahead, there are internal, structures changes which is being happening. The way we should be building our teams, considering the digital is going to be the forefront of of all our strategies, etc. I will be keen, Gaurav, in terms of your future. I know for the fact that we look up to what kind of platforms, what kind of insight which will be coming across for marketers to start engaging with the customers. What we should be expecting from Facebook in near future? Are there any new platforms, any new products which you'll be bringing into the market for us to look out for?
Yeah, I mean, Rahul, like I was pointing out earlier as well, right? I think the digital transformation of the real estate sector in India is just beginning, and we are in good space, good hands. I think developers and aggregators like you are taking all the right steps. I think even the existing tools, right, are not completely utilized. So, for example, a lot of panelists spoke about how can we get the right leads from the prospective customers. Are we utilizing enough big data? Is there enough machine learning involved to make that data actionable? I think that's one big area which is yet to be explored, right? The second one, Rahul, I would clearly call out is the virtual reality and augmented reality. I think that part of the funnel, that part of the classic marketing funnel, if you will, remains underutilized. What percentage of our prospective buyers actually end up visiting and not visiting the site, but taking the decision completely through online? And then there is loyalty and customer retargeting, etc. Specifically, Rahul, I would like to talk about what are the advantages that a digital marketing can offer if you were to compare it to a traditional forms of marketing, right? So first one would be clearly to how do you boost and amplify your exposure through better reach and brand awareness. I can tell you, if property developers were to take advantage of this, it would increase their visibility to a target market and demographic of buyers. Establishing an online presence will grant the developer ability to generate more leads and thus increasing the possibility of swiftly converting those leads into actual sales. The second one should be and would be identifying and understanding the target market and their needs. So like someone on the panel mentioned, right? Digital marketing is now a core part of any marketing plan. And as developers gain control over who they reach out to and at what stage, I think it becomes very, very powerful. In fact, Facebook has a lot of tools to enable geographical reach of engagement and give the marketeers the capability to sort of tailor the audience to a specific age, gender, and multiple other factors. The third one, Rahul, is, and I think which is less spoken about even today, right? I think the biggest advantage is the measurability. Everyone wants to know what is it that I got in return for every dollar spent, right? Frankly, it has just been a black box for most realtors. Today, there are means to track the entire customer journey, right from viewing an impression to the final closure of sale, even to the extent of the number of touch points that it took the user to convert. So measurement, flexibility, ease of reach, efficiency of reach has made digital a almost a no-brainer for advertisers looking especially for scalability. Well, there is a flip side to it also. So many teams working independently to close in on a sale, attribution of cost becomes a challenge. And I can tell you there are certain advertisers, real estate advertisers in the country who arrived at this proper attribution model. And, they clearly know this is where I need to spend if I need to get better ROI at efficient cost along with the reach. And the last one, Rahul, I would definitely, of course, we are all in the business of business, right? Is cost efficiency. There is a long road to closing a real estate deal. We all with online advertising, I think the power that the advertisers and the developers get is that more people can interact and make basic decisions on the listed property without having to be, present on a physical location. The opportunity for customers to interact virtually, it not only saves time and money, but it sort of shortens the entire, decision cycle. And then, of course, there are these cutting edge things like, a WhatsApp API or a Facebook or Messenger bot that is being used in very, very creative ways. Like, I can give you an example. There is a leading Indian online real estate aggregator that we work with. They use WhatsApp Business API to automate the way they collect property photos and upload them to property listings, right? And that resulted in literally a 20x annualized return on saving on investment purely through savings. So I think while a lot is yet to come, I think the existing technologies are also not being completely utilized by everyone.
I've got a message is loud and clear. If it is Facebook, it has to be performance. And wait and watch. There are newer and newer avenues which will be coming, which is relevant for all the marketers. While we have 4-5 minutes left, I want to sneak in one more question, which is an interesting one. We have seen from rural we are getting into regional, and one of the convenient preferred language for real estate is largely English when it comes to digital space, so on and so forth. One of the recent time, what we have seen is that the vernacular language or regional language as a preferred use language has been increased by 10 times. Would you see marketeers or real estate, for that matter, would generate or engage content on a regional level? Probably, Anil, you may want to pick it up, followed by Gaurav and others.
Sure. Considering the ticket value that we were speaking about, and also considering the fact that this is once in a lifetime kind of a investment that people do, English, most people of this particular strata do understand English. But I also see real estate development happening in the tier 2, tier 3 kind of cities. There's a lot of migration that is happening today between cities. And in that sense, I would always look at regionalization as an important strategy. So you should keep the core of your brand in English. But like I said, digital is about convenience. And if convenience means that people access it in a language of their comfort, then we should make it a point to kind of, but this need not be deregular. This needs to be taken on a case-by-case basis is my point.
Interesting. Gaurav, your viewpoint, if I may ask?
Yes, sure. All you rightly said, right? Literally every month, there are millions of people coming to internet on the first time. Of course, driven by cheaper, affordable smartphones and almost ubiquitous present low-cost data, right? Now we are almost talking about 500 million Indians online and accessing the internet primarily through their mobile. And so internet is no longer English male audience. It has penetrated well, deeper and well beyond that. And any sensible marketer will tell you that, they have to cater the communication according to the customer, right? So I know there are chunks of people on internet, like we are talking about literally tens of millions of people actively engaged in languages like a Telugu, like a Bengali, like a Tamil or a Marathi. So I think it is very, very important that our communications to these people, be it the classic upper funnel brand campaigns or be it the classic lower funnel conversion lead campaigns. I think those should speak the language of the consumer. In fact, at Facebook, our ad solutions also sort of dynamically cater to that. And I won't go into details, but at a very top level, what it does is it has the ability to dynamically change some of the languages based on the content, the language of the content that the consumer consumes, right? So the short answer again is yes, vernacular is an important way, and it will only become more important as more and more people keep engaging.
Superb, Rajiv. Go on.
Yeah. One point on this has been a long debate in real estate, whether to go for vernacular, regional language. It's been there. What we have done and what I have seen in the a low-cost housing, it's affordable housing, or whether it's a premium. You need to be a bit clear about your brand imagery and the positioning that one is taking. If my positioning is premium and luxury, I will not be doing anything. I keep it aspirational, so the guy who sees the ad in Times of India or anywhere else, that aspirational is there and my imagery is intact. For example, we did one, we have a project in Kandivali and we said that it's a Gujarati community surrounded area, so let's do an ad in Gujarati. But that didn't give us results. So it is wrong to say that, if you have a project and you are targeting certain community and do it in that language, it will help you to get results. It may not. It depends if you are doing a segment-wise breakup. Yes, it works certain segment, whether it's a low cost, whether it's affordable segment, to an extent maybe lower premium segment, but may not be for all the projects. So it is not a clear decision that, I have a project, let me do vernacular and go to tier 2, tier 3 cities and make it, lead collection through vernacular language and content. It may not work because your creative needs to be changed. Your creative imagery is more critical, and how you keep an aspirational value to your premium and luxury projects.
Got it, Rajiv. Aspiration is a key factor. Yeah, Chajay, go on.
Interestingly, what we're seeing currently is that there is other languages apart from Dubai as a market has primarily is in communication, especially from a real estate perspective. But over the last couple of years, we've been seeing a tremendous shift, being supplemented with Chinese as well as with Arabic. And it's the same product which is being communicated to different consumer segments. With both Riza and Rajiv and Gaurav, of course, needs to remain paramount, and how you communicate the brand. But most importantly, the consumer segment that you're targeting, is it assimilating the communication that you're sending across? Is it making it contextually relevant at the end of the day? And is it giving a sort of a push and a prod to actually inquire more about your product? So I think that's what it is. So and we've been seeing a lot of Chinese investors come into Dubai, a lot of Arabic, when we're targeting the local Arabic community, the Emiratis or the Qataris or the Bahrainis, or the Saudis. We've been forced to use Arabic at that point of time. So obviously there is contextual messaging behind it.
So probably we would soon see SD Corp or Embassy having a regional launches.
Excuse me, Rahul.
Yeah.
Hi, Rahul. Ronit here. We're just running short of time. If you could kindly.
Super. So thank you. I would have loved to continue this session. There are super viewpoints, but just to summarize, is the performance. I love the viewpoint of Gaurav talking about as compared to global comparatives. India is not that behind. It's very much at the peak of its journey. And definitely, I'm looking at how marketers will be using this space more and more to build ROI as well as build image for the brand is concerned. Thank you very much for your time. Stay safe, stay healthy. Bye-bye.
Thank you.
Thanks for that excellent session. Ladies and gentlemen, we are now beginning exciting fireside chat. Pause, shift, rebound, the co-working way. The session will be moderated by Mr. Mayank Sharan, Director, Anarock Retail. And we have our esteemed speaker, Mr. Amit Ramani, Founder and CEO, Office. Welcome, panelists and moderator. May I now request Mayank to kindly take over the session. Over to you, Mayank. Hi, Amit sir. Mayank is just joining in a minute.
Hi, Ronit.
Yeah. Hi, sir. Yeah, Mr. Mayank has just joined.
Hi, Amit.
Mayank, you can take over. I've already announced the session. You may start.
All right. So, good evening, everyone. I am Mayank Sharan from Anarok, and welcome to the third Real Estate Confluence Indian Real Estate Vision 2025. We have an interesting fireside chat with Mr. Ramani lined up, and the topic for our chat is pause, shift, and rebound the co-working way. Let me start the session by introducing Mr. Ramani to the audience. Mr. Ramani is the founder and CEO of AWFIS, which is the largest network of co-working centers in India. He started AWFIS with the vision of revitalizing the office space delivery ecosystem in India through technology backed just in time. Mr. Ramani's strong background has allowed him to provide innovative and complex project services to multinational corporations. He's the member of YPO Delhi chapter, RICS, and NASCOM. Hi, Amit.
Hey, man. Glad to be here. Thank you to CII and Anurag team.
So, Amit, let me just start by asking you my first question. What was the vision with which you started the whole journey of AWFIS?
So, Mayank, I think clearly in 2015, there were very few models to go after. There were a few global models, but locally, there were very few models that one could emulate. So we kind of created our own playbook, and the playbook basically looked at three elements. One was flexibility, so people should be able to take number of seats for the duration that they want. Second was accessibility, and now with almost 70 plus centers, we have a network where within a 15-20 minute driving radius, you would get an office center. And third was transparency, right? That's where technology played a role, where it was a plug and play environment. You would discover the price on the platform, book it, and use it, and be on the go. The other piece that was important was that we were clearly addressing a very underserviced commercial real estate opportunity, which was the SMEs and their requirements in the country.
Correct.
And which was a large chunk, and clearly we positioned the product there. And third is our managed aggregation model, where we felt that, because in this country, the real estate market is very fragmented, we could partner with the landlords to create a much higher return for both the tenant, in this case, us, and the landlord, and also de-risk the business to some degree, because us and the landlord were taking almost equal risk there. So those were the kind of basic principles on which we started office. Today, obviously, we operate close to about 40,000 seats across 72 centers, 11 cities. So we have truly built a network which is able to address the SMEs, startups, and the corporates and the enterprises in the country.
Super. This story of co-working was almost, very vibrant before the pandemic happened. Almost 12 months into this pandemic, how do you think the journey has been so far for you guys?
So I think obviously the first few months, everybody was in an uncertainty mode. So it was a bit hard. Sales were low. People were leaving co-working spaces. People who had short duration contracts, etc., obviously left. So the first few months, I would say the first quarter, April through June, was a bit hard. But things have picked up fairly well. And clearly, we are, as of October, we are almost at pre-sales levels of pre-COVID levels. And what we see now, a big change that happened, it was almost like a demonetization moment for fintech. Not that I wish COVID should happen to us, but it actually accelerated some of the adoption. And the biggest adoption that happened was for the enterprise customers. Above 500 seats to almost 2,000 seats, which was a market which was almost sitting on the fence, has stepped in clearly, and they are looking at flex space, co-working space as an alternative to conventional space. So clearly, we have seen some fast tracking on that opportunity, and a market which was about 25 million of 1 billion square feet, 25 million being co-working, is slated to become anywhere between 2x to 4x, right? A market becoming really large. And the third piece which is happening is that people are very concerned about the network, the credibility of the brand, and the ability to service their requirements, which are getting far more complicated than what an SME would have. So enterprises are commanding that brand and are commanding that ability to deliver a consistent experience across the network.
Super. During this whole pandemic, we heard the whole social distancing, and based on that, my next question to you is, has there been any specific alteration in the co-working spaces design and the de-densification of the seats?
Yeah. So three key things have happened. One, obviously, the hygiene levels have gone up. So clearly keeping a high hygiene level, keeping all the checks in place, like temperature check, having a thermal scan, all of those elements have come into play from a physical infrastructure standpoint and management of that physical infrastructure. Second, we are managing by ensuring that social distancing is happening by using alternate seats, creating the right social distancing by keeping 6 feet within the spaces, de-densifying the space to ensure that that 6 feet distance is maintained. The third is the technology element. And I think the technology starts from the start of where you enter the building. So clearly we have put with our partner landlords certain technology checks in place. So this could be thermal scans, could be a visitor management system that's totally touchless, to coming to our workspace where a QR code lets you in. You can order food through the app. We have integrated the app with the Arogya Setu. So anybody entering is in any case checked through the Arogya Setu system. So all of those technology elements is the third piece that we have done. And I think clearly some of this is going to continue to stay. I think these were things that were probably required, and I think now have been implemented, at least in our network, and our partner building networks are implemented to ensure the safety of our community members as well as our employees.
No, that's exactly what my next question was, but which you answered, which was the technology bit. But clearly, I mean, that seems to be one of the advantage that almost all co-working players are playing. Amit, in terms of business, you mentioned that you're back to pre-COVID level as of October. But how was the journey over the first 2 quarters of financial year, which went back last year? And where do you see this year the ending of almost all your seat sellings?
So, Mayank, the first quarter was a bit hard in terms of new seat sales. Obviously, clients did take a bit of a approach of let's just give a notice where there's an opportunity to exit because there was uncertainty. The second quarter, I think stability started coming in. Seat sales started going up. Customers, less and less customers started leaving us. Stability came through enterprise customers taking a view that this is going to be, short-lived, maybe another, 3 months, 6 months. And I think clearly what we are seeing now is that that fear is gone, right? I mean, people are back to malls, people are back to flying, people are back in hotels and in restaurants. Similarly, that fear is gone, right? So people are back to the workspace. Physical occupancy has gone up considerably, almost doubled. In many cities, the physical occupancy is almost up to 60-70%, right? So which gives us the confidence that yes, the new seat sales are up. Enterprises are looking at co-working as an option. Clearly, physical occupancy is back. So work from home, while it sounded great, I think people have realized, now kids are going back to school. So I have no reason to stay back at home. So let me also think about, coming back. And I think that's happening clearly. More and more people we are talking to, they are saying we want to get back to office. The social connect is missing. People are tired of working at home. So what we see is in the next couple of months, and fingers crossed clearly, we hope we don't have any other, blips there. But if all goes well, my sense is that most local multinationals, SMEs, and startups will come back to offices as of April. Our global multinationals are looking at somewhere around June and July. So maybe a couple of more months of a bit of pain. But I think physical occupancies are back. Contractual occupancies were ramping up in any case with the new seat sales. And my sense is that it will expand the market, which was about 25 mil, will become close to 30-40 million just in 2021 because of the pent-up demand. I'm extremely bullish. I think it's going to be a rocking year for co-working in 2021.
Great. You mentioned about the de-densification of the seats. Does that put any impact on the cost per seat for the occupiers?
Mayank, I think some of it might have a minor impact, right? I mean, because, to go from, to maintain that 6-foot distance, for example, you only have to put in about 10% extra de-densification has to be about 10%. So there is some impact. But clearly, we all understand that some of it is required, it's necessary, and we in any case are going forward and ensuring that the new densities are in place in any of our new centers being rolled out. We're retrofitting some of the old centers to make sure that that's happening. And customers are smart, right? They do understand that if there is a extra cost, then somebody has to take control of that, right? And clearly from our standpoint, I think some of it we have absorbed and some of it our customers are gracious enough to support us in that.
Super. What do you think the future is? Where do you think this business is headed?
So it clearly got established as an alternate option, right? But clearly before that it was, let me do a warm shell, let me do a fully fitted out option. Now today I can say with certainty that flex and co-working is an option in addition to all options that were available for real estate occupiers, right? So clearly that's one thing established. Second, as I said, I think India is far ahead in terms of thinking of new flex options, like for example, managed offices has become mainstream. Co-working hybrid models were already working really well. People are talking about now just providing the services and not owning or leasing the base space. So I think as an Indian entrepreneurship, is clearly evolving. So is the co-working industry, and the co-working industry continues to focus on providing solutions that work for the customer. And I think we are extremely fortunate that there are formidable players, there are serious players, there are 10, 15 players that are driving the market, and they're driving the market in a direction where it's going to help the customers in the long run, right? Flexibility is going to become the core. Pricing obviously is going to be more value driven because clearly you're not stuck for the 6 years, 9 years, you have a short-term duration. And third is the network, right? Clearly for somebody to have, 10 locations as part of the business continuity planning, as part of the distributed model would not have been possible if there were no co-working operators. So clearly, I think as a partner, we have as a segment, we have established ourselves as a solution for the occupiers. The occupiers are only going to benefit by looking at flex and co-working as an option as they look at their real estate strategies.
And clearly, in line with this was, your newest acquisition that you've done with Prestige. Congratulations on that. That's a large one that you've gone out and taken up almost 200,000 square foot, right? That's the new acquisition that you have done. Perfect, sir. That's pretty much from my side. What I would probably like to summarize this fireside quick chat, sorry for a little delayed start, was that, presently you were at some 70 plus centers.
October last year, we came to pre-COVID levels. 60-70% absorptions have already started taking place. By April, you feel that the domestic market will probably come back full swing, and by June or July, the MNCs and others will come back to offices completely. Great. That's pretty much it from my side. Thanks, Mr. Ramani, for this chat.
Thank you, man, and thank you, CII, for the opportunity.
Thank you.
Thank you, Mr. Ramani and Mayank, for that excellent session. Ladies and gentlemen, we will begin shortly with the next fireside chat, which is on Tech Innovations 2021 and beyond. The session will be moderated by Mr. Sunil Mishra, Chief Strategy Officer, Analog Group. He will be with Mr. Harish Chawla, Partner, True North. We will begin shortly. Hello, Mr. Chawla, and welcome. We are just beginning in a couple of minutes. Sunil is just joining in. Okay, the Sunil is there. Yeah.
Can you guys, my picture is okay? Everything okay? Voice, sound?
Yes, perfectly fine, sir. Sunil, you can take over and begin. Sunil, you're on mute. Can you unmute yourself?
Thanks. Can you hear me now?
Yes, clearly.
Awesome. Great. And Ronit, have you introduced Harish already, or should I?
Yes, I have already introduced you. May begin with the session.
Oh, okay, excellent. So good. So I hope Harish has done sort of justice to your introduction, and we'll keep on sort of talking about that more as we go ahead. Interesting sort of session on technology in and around real estate. But having got you, Harish, here a prize catch for us, since you have had a ringside view of many of the internet tech and digital startups with big names like Money Control, Yatra, Network 18, Home Shop 18. Would love to just sort of make it a bit freewheeling at the beginning and ask you to take us to a journey of almost technology and digitalization of India itself, and possibly sort of touching whether real estate has been able to keep pace, or how's the real estate been in that sector?
Yeah. So thanks, Sunil. Pleasure to be here. So I've been watching and investing in technology businesses since almost 1999, which is 20 years.
Right.
And one has seen all the cycles where, first in 99, we thought, everything is going to be, we had the first, let's say, boom, but there were hardly any consumers and hardly any computers in India actually that time.
Right.
And then we started seeing the next wave of slow build-up of companies take place over the next decade. And now, in a sense, we're in a third cycle where it's all mobile-enabled, consumers are ready. And post-COVID, in fact, everything has changed completely because the adoption changed of internet streamers. Remember, data prices are so low in India that we have had massive video consumption. But now all those consumers are also internet transactors. So I think there's a fundamental shift we are seeing post-COVID. Every sector has boomed over the last 20 years. You see e-commerce, fintech, tech. I mean, name a sector. We've seen digital investments take place. Some of it obviously has got created a lot of burn. But you found that sectors have transformed. If you look at mobility, if you look at food businesses, Swiggy, Zomato, multi-billion-dollar companies with large revenues as well have been built in each of these spaces. Unfortunately, it's been a lost decade almost for real estate. I mean, I invested in housing.com in 2011, actually, virtually at the end of that. It's almost 10 years. I call this a lost decade for real estate because somehow the underlying market, never got organized. And therefore, even though, you can't say that real estate wasn't capitalized, a lot of hope was there in the early part of the 2010, 2011. Money was poured in. A lot of businesses, investments came in. But none of them got traction. And the fundamental reason was that the underlying market, which is below, digital technology usually sits on top of a market. But below that, there was fear, uncertainty, and a completely chaotic market. So you've seen no company has actually been able to break through or break out, given the kind of investments that have gone in. I mean, there was no exclusivity or any kind of importance given to the contracts you have in the market. We've seen fraud also take place. So there's a lot of fear that drove consumers and it still drives consumers. Even today, it's one of the biggest purchases in the Indians' lives, and they still worry about it. Imagine it's 2020 and people have to worry about their transaction. You end up going to the website and you see listings and you don't know whether listings are real or not. So some of those ills that are not there in India sector, you'll find that all of the other internet markets in India have actually gone through that painful period and now are reasonably, consumers are certain, they have no fear, and transactions have become frictionless. And that's also standardization. So remember that there is no standard contract today to buy a house. You have no idea what the real paperwork that goes into the property is there. Developers have been taking, and again, remember, RERA has just come in, but before that, there was even more heightened uncertainty whether your project will get complete, whether you'll get your money back. So I think those factors have held this market from growing. It's the largest market in India. But investor after investor has put in money and not seen any traction, and it's very unfortunate. And I think now we've seen some of those changes take place. As you saw, I mean, RERA was one big move. I think even developers are now realizing that it is becoming a real business, which you can build on the long term and you can build large enterprises here. So I think there is a mindset shift in the industry as well. So I think some of these factors that are coming together now, I think we'll see the real catch up taking place from the real estate and prop tech side happening over the next decade, actually.
Right. So before we go on to the future, quite a sobering and almost a scathing summarization, Harish, that of the last decade, and it could be almost 2010 to 2020, possibly this decade itself. Yeah. And you're so right that the underlying in the sector has to behave robustly for the technology to enable and unlock the value. And among the 7-8 consumer internet verticals, e-commerce, travel tech, transport tech, food tech, reality tech almost almost flattered to deceive. It never really took off.
There's no large company.
Yeah,
large scale companies in the sense compared to the sector and the size and the opportunity. I mean, you just look at it's a travesty in that sense.
Right.
I mean, I'm not saying, okay, we had housing.com, there were management issues there, but tell me other players, none of them have got that scorching growth and influence in the market that, or consolidation that's taken place. Nothing has, risen above the let's say, chaos of the market to become real large spaces. Not happened.
Right. And easily so clearly that's been the case. And Harish, we can jump into the future to check what's happening recently and what's going to happen. What do you think are the trends going ahead?
I think the market as a whole, as a prop tech, I thought you can break into 3 components. There is the whole creating and transaction component, and that's one whole, let's say, section. Then there is the whole using, living, and I'll give you examples to explain that. So a developer builds a property, there is a whole bunch of technology needed to track the property, to find the customers, to show them the site, to sell it to them, to to close the loop and get the payments, to pay off the channel partners, to make sure that whole piece is there. That's one part. The second part is where we are seeing new ideas, whether co-working, co-living, how people are using the property, the property management services, or you'll find that people take, actually start renting directly.
Right.
Remember, so these are the two components. But the third component, which is the most crucial, is actually now will start playing off, is the financial component here, because this whole industry lends itself to lots of financialization. And those ideas is what I'm going to see a lot of them play out, and that can give this sector and change its complete face over the next 5-7 years, because you can fractionalize purchase, you can start creating long-term rental tenancy deals. You're seeing how REITs have come in. So the entire financial money moving into this market. Remember, India is going to be a very, very strong market. Is going on. I don't see a situation where this real estate sector, I know we've had bad years, but on a long 20, 30 term horizon, there are enough investors sitting in the world who believe Indian real estate is a long-term story, and the risk for them is very different. I mean, they see this as a low-risk asset in which they'll be able to take long-term bets. Moment that happens, and the financialization happens of this sector, where transactions get tokenized, people can invest partly, liquidity is available easily, you can enter and exit assets. That's the, those are three, let's say I call the building blocks, where technology will play a massive role. One of the things that players need to focus on is to create trust. I think that's one thing that's been missing over the last decade. That needs to come in. And transactions need to become frictionless. How we've seen, when you order from any restaurant nearby by pressing a button, you can order a product and get delivered the next day, press a button and get a movie. Similarly, why should consumers have to worry when they buy a house that whether the contract is protecting my rights or it is not? Or when they go into, rent a place, they don't know when they'll get kicked out of it. So some of, this sector's growth will come the moment new capital comes in. That will transform the outlook of all the players. And I see mega developers emerging. Remember, for such a large market, we have relatively smaller, developers in the market. But the players who manage to get trust and technology both going for them, I mean, I think the growth potential is, almost infinite. The headroom is massive for the players here. Because if you can get technology and trust going, create simple, sensible products for consumers, and the developers themselves will become a layer over the actual real estate market, because they'll be able to put together projects, use technology for their own teams, and also to ensure that consumers who buy are always certain about what's happening and have a longer life cycle with them. And then they'll be able to spread themselves across India. So I think a small example is we've seen how stamp duty in Bombay, that friction from 7-8% down to 2%, how change people's mind. So it's the same thing. Amazon says next day delivery. It changes your fundamental perception of how you should do shopping. Or meal gets delivered in 20 minutes with full certainty. It changes the number of times you start consuming from a restaurant. So similarly, I think the few players who will take this long-term view, invest behind technology, and more importantly, invest behind creating a brand, creating products that actually fit consumers' lifestyles and create certainty in the consumer's mind on what they're buying, not have to worry about, have I paid the right price? Have I signed the right agreement? Will I get the conveyance for this building? Will the society get formed? All those fears have to be taken out of the market. And I'm sure that players who are seeing this already, I think we've seen over the last 1 year, post-COVID, companies that have got great brands have been able to scale dramatically. At least initially, the market is giving them premium. And I'm sure that their projects will also catch up.
Correct. Again, just to sort of try to just summarize that in a couple of sentences. So trust and technology, that is brilliant. And looks like technology itself
would sort of create trust. It was a bit of cyclical thing between the two. And quite a few companies are doing that, Rish. But I actually, in internal circles, I used to call 2016 as the 1991 of real estate when RERA came in, and I was very excited that once the investors and buyers think that they are protected, then I think the market will take off. Because this whole frustration, and you pointed out, and I'll quantify that there are about 50 lakh migrants coming to the top 10 cities every year. There's a McKinsey sort of stat, and the number of new homes sold in top 10 cities 2.5 lakhs. So there is a huge demand waiting to be tapped, but possibly all the points that you mentioned have to fall in series. The players have to recognize the sort of demand, create frictionless sort of medium to get them in, and then use technology to develop trust. And then this 2.5 lakh or 3 lakh homes sold might go to 10 lakh.
Absolutely. And better homes, and consumers want the facilities. They want a smart home. They want to be able to press a button and pay their bills. They want all these services. The core challenge is that I think that there was a generation, there was a time, let me call it generation. I think the same generation of entrepreneurs here. But earlier it was fine to delay a project because you could still keep on making money by the upside from the real estate value. So time wasn't a enemy that time. But now I think the new paradigm where the time will be a big factor in how you do your project. How quickly can you develop it? How quickly can you market it? How quickly can you deliver it? How quickly can you collect the money? And how quickly can you make consumers happy so that they can spread the word that you're a great developer? So I think the companies that realize and the firms that realize this factor of time and trust, and technology, actually, time is now going to play a major role, because the margin project will probably operate in a narrow band. And therefore, how fast you do it, how you raise money to do it, what's your source of capital, again, that depends on the brand and the trust. Because remember, a developer is coming in between both sides. There'll be one side, a whole financial market, which is ready to pump in money into the project. And those terms matter because that's the leverage you get. And the other side, consumers who are willing to give you the money, buy early. And as long as you keep delivering, give you that premium. So I think there is a whole new virtuous cycle which can take place, all driven by technology as a layer. But first, I think we have to attack this whole trust layer of the market. I mean, if that gets sorted out, things will change dramatically.
Got it, Harish. And the time, trust, and technology, the 3 T's is what you have given us right now. And trust, to be fair to the industry, with RERA, demonetization, GST, insolvency code, I think the government is doing its bit. We have we are a nation of government baiters, but I think they have done the trick, and I think you're right. It's the industry which has supposed to understand this and take it and take off. And I think in the last 1 year, we are seeing players moving towards that direction, and hence the consolidation and concentration of market share as well, possibly that's coming up.
Absolutely. And in my sense, the government, I think, did not want to, given all the chaos in the market, did not want to put, directly go and help players. But my sense is that what they've done, see, I think government also now realizes, or has been realizing, that the residential or the real estate market really sits on top of the food chain of consumption. The moment a person buys a home, they buy a car, they buy furniture, they buy appliances, a chain of events take place after a home has been bought. So in a sense, I'm hoping that we also see some kind of tax benefits that even go more, because this is one of the biggest ways to get the economy moving again. Because the home brings with it a bunch of goods and services, which is unparalleled to anything else. And we've seen that. I mean, again, we saw the stamp duty go down. I'm sure they would have made more up by the number of volume of transactions, plus also the services that would have got sold during the last 6 months in Bombay. So I'm just saying that there is a virtuous cycle for the developers. I think there's a bigger virtuous cycle that the government needs to get going by even more incentives, actually. It's just sitting in the food chain, and this food chain is generating food, actually. It's it's not eating.
It's a positive feedback cycle which you're talking about. Harish, clearly, so yeah, you're right. While I started talking about the achievements of the government regulation, deregulation is never enough. I think there's a lot of stuff that can be done. And love the point of that elasticity piece on stamp duty when the rates are lowered. Actually, the collection has been higher. Forget the dominoes impact on the other services.
And domino impact is hidden, but my sense is much larger than the stamp duty. It is massive.
Right. So clearly, regulation should keep on aiding. Coming back to technology, and I remember telecom days when regulation, technology, and macro were the three sort of almost porter forces told to us that you get that right, the market share will fall in place. So it's the same for real estate as well. At least regulation has started playing its part. Technology has to move ahead. Harish, just a quick dip into the three pieces of evolution: the transaction, the using and living, and the financialization that you mentioned. You spoke about financialization, where I think REITs is the first step there, but I think you're talking about something bigger. It's the fractionalization of residences as well, and is that right?
Yeah, absolutely. I'm saying there is, for Indians also, real estate will be a great asset class to own. The only challenges today are that there's lack of trust, there's lack of liquidity, there's lack of certainty. The moment these are removed, and my sense is whether it's using blockchain or any other technology, but the fact that you can fractionalize projects, that I can choose to invest 10 lakh rupees in a project. I don't have to buy a 2 crore house or a 1 crore house. I think those new innovative products will actually start coming out. The other thing, as we're seeing in the US, if you want to sell your house, a company like Open Door buys it off from you today and takes all the uncertainty. My sense is the moment we remove uncertainty, demand will follow. As I said, the stamp duty is a small example. The moment you remove friction, we're seeing in every category. I mean, look at any category where technology has come in and remove friction. Consumption has jumped 2x, 3x, 10x, 100x sometimes. If you look at the music business, the moment you can get thousands of songs on your phone, it go multiplied by 100x, and now you can get a stream. You have 1,000x growth in the consumption of music. So what you're seeing at a base level, technology gives us that gift where the moment transactions become frictionless, the moment people have more certainty where things stand, the consumption goes up. And therefore, if there is for our people to invest directly in the asset class, they will. It's a great asset class over a long term. It will be low risk. India is going to have the urbanization. So I don't think, I think it just needs a bunch of clever minds to come and look at this industry with fresh pair of eyes. And my sense is the other thing that technology allows us to do is it blurs the boundary. Nothing stops a developer from doing work across all these three elements, actually. Handle the transaction, manage the usage of the asset, and create a financial vehicle by which money comes in at a capital is created at a very low price into this whole ecosystem. So that's the other thing technology allows you to do, is that if you focus on technology, you can manage all these three end to end. I mean, you can sell the asset differently, you can have different use cases for the same asset, and you can build and sell the asset in a record time. So I think that kind of mind opening, if it happens, and we have a few success stories, I think it will be transformative for the industry.
Superb. So yeah, it's sometimes the definitions and boundaries for our category itself which we define, which limit us. And I think you're saying we need to sort of almost drop those boundaries, use technology as an enabler to sort of straddle across these almost compartments in our mind. And
absolutely, and we're seeing in the West, there are multi-use complexes, and those large companies have their own financing vehicles. So it's massive. Look at the opportunity is just there for the taking. I think there's a fundamental shift in the mindset to view it freshly and then use technology to solve a lot of issues and build a brand which creates its own pull.
Right. Awesome. Harish, a couple of questions which had come up and I was checking with people before this session. One was, and I don't know if you have enough domain sort of info there on the rental problem, solving the rental problem. So a lot of our discussions are on new homes most of the time. So there are a few startups, consumer internet plays which are there. Do you think enough has been done? And of course, the older guys with whom you had bagged, housing and a couple of other competitions had started doing that. So do you think we have done enough to solve the problem, or there's still a lot of things?
No, my sense is that, I think developers will have to make the first moves there, where they reset the way the tenant thinks of the market. See, I think still this tenant-landlord relationship is not standardized.
Right.
It's not easy.
Right.
It's not scalable. People live with uncertainty as to when they will thrown out, when they'll get a notice. My sense is this whole equation needs to change. And that will happen when capital flows into a project where the project becomes maybe partly only rented out directly in a formal manner. And the terms of trade between the tenant and the lessor and the lessee are very different. How it's in the West, you don't live with this uncertainty. So apartments are standardized. That's the other challenge here. You see, one of the other core challenges in India, you can be in the same locality and two buildings can be completely different in their condition, the state, the price, everything. So there is no standardization at the underlying market. So I think with the complexes coming up, with condominiums coming up, I think that's coming in. So once that happens, and if there is a way that at some point, see with COVID also, that's going to happen, that people are not necessarily going to the urban center. So my sense is the difference between the rental yield and the capital appreciation will shrink for the project. The moment that shrinks, people will find that it makes sense to fund the project to be a rental project for a while, or part rental, part option to purchase. So a new bunch of instruments can emerge. So I think on its own, I think the informal market, which is a tenant, owning one house and a landlord somewhere and a tenant somewhere, I don't think they will get standardized immediately. I think the standardization has to happen from the real estate firms.
Got it. Super, Harish. No, brilliant. I think all these are points to ponder. Harish, so just in the interest of time, I'll bring it to almost a close with last 1 minute or so. Without doing a matha take to COVID-19, no discussions over. So just wanted to, and you alluded to it a bit, but did you see anything in the last 1 year which you think was exciting or which could be permanent change in the way real estate is sold?
Yeah, I think there is now a renewed focus on home and comfortable living. I think that's going to drive. So a lot of money is actually getting diverted. A lot of money will get diverted from entertainment, from international travel, from domestic travel, from buying, fancy handbags and shoes, to making sure the house is comfortable, has enough room that the person who's gets a chance to work at home at least few days a week. So I think that fundamental shift we are seeing already. Appliance demand, furniture demand, the interior demand has all gone up. So I think that is here to stay, because remember, it may appear to be a short-term phenomena, but people see each other's signals. So if somebody is moved due to COVID into a very comfortable house, his colleagues, his friends will view it, and then you'll find this pressure for everybody to make that move. So I think times are very good for the industry actually. And the only last thing I like to say that your projects are on earth, but your business has to be on the cloud now. I think that's the one thing that we
So the projects are on earth, but the business has to be in cloud. Superb.
Yeah, exactly.
So with that, let's sort of bid farewell to these sessions, and could keep on having these discussions on the side anyways. Thanks, Harish.
Okay. Thanks, bye-bye.
Thanks for having me. Bye-bye.
Thank you, Mr. Chawla and Mr. Mishra, for that excellent session. Ladies and gentlemen, we are now beginning with the final and the most exciting session of today. Is Gen Z ready to take on the world, where we parry between the current and the future generations? Let me introduce first the esteemed panelists, Mr. Jitu Virwani, Chairman and MD, Embassy Group, with his son, Mr. Karan Virwani, CEO, WeWork India. Mr. M.R. Jayashankar, Chairman and MD, Brigade Group. Ms. Pavitra Shankar, Executive Director, Brigade Group, and Mr. Deepak Goradia, Vice Chairman and MD, Dosti Realty, with his daughter, Ms. Shraddha Goradia, Director, Dosti Realty, and his son, Mr. Anuj Goradia, Construction Management, Dosti Realty. Welcome, panelists.
Thank you.
This session will be moderated by Mr. Anuj Puri, Chairman, 3rd edition of the CII Real Estate Confluence, and Chairman, Analog Group. Over to you, Mr. Puri.
Thank you very much. I'm absolutely delighted with this session. I was looking forward through the last 2 days to do this discussion. It's got my favorite people on the screen. I'm going to have great fun. I did circulate some questions to this group, and I'm not going to ask any question out of the ones that I circulated because there was just a trick to get you onto this panel. I was looking at the title and it said, is Gen Z ready to take on the world? I was just thinking to myself, I got a son and daughter who joined the business. Are we guys ready to take Gen Z? Is Gen X ready to take Gen Z? I think more than Gen Z ready to take on the world. I think that is very clear that Gen Z is ready to take on the world. Pavitra, I'm going to start with you straight in there. Two quick questions to you, Pavitra. Your dad is like the Amitabh Bachchan. He's like Sachin Tendulkar playing, and then you are like Sachin Tendulkar's daughter getting into cricket. Has it been daunting to get into the business, or you've never seen him like that?
Actually, yeah, well, hi to everyone. Total left fielder, Anuj. I was only going by the questions that you sent me. I'm not sure what this even means. No, so I would say for me, joining the business was never really something I intended to do. It wasn't even something that my parents really pushed me or my sister to do, my sister Nirupa. And I think that's one is because they thought we should just pick what we want to do. And two, to some extent, maybe because it is a construction firm in a real estate industry, which typically you don't see too many women. They maybe thought it wasn't the right one. But I would think that, I would say that as we sort of made our way through college, worked for other people, for me personally, I worked for somebody else in the US in consulting. I got my MBA from Columbia, and that whole part where I was trying to figure out what to do next, I did an internship with Brigade, reporting to my dad. And I think that was sort of the game changer for me. Until then, I just thought, why would I work with family? It seems like it could just end up in some sort of contentious positions. But really, that was the time when I had worked enough for others, when I realized that he's a great person to work for. Like I would actually, purely from a professional standpoint, I would actually stand to gain so much from working with him, from career, from my knowledge, in terms of opportunities. And I think that was it was a major turning point for me. Until then, even though I was 26 at that point and I was heading to business school, I actually at that point had no intention to work for the business. But after that, when I joined, after I graduated from Columbia, I couldn't immediately come back to India. So I ended up working for a real estate fund in San Francisco. And having that analytical experience really helped me today to where I am today. And I ended up having a business in the US for 4 years, where we actually dealt with NRI customers for Brigade. So I think that has been formative in terms of what I have brought to the company and my sort of background. I understand what the customers want. I 100% was talking to them pretty much every day and understanding what kind of service levels they expect and what kind of trust issues they have. So I think those few things were instrumental for me to join the business. And of course, there's nothing like actually being here physically in India, part of the business, and actually not even so much from a real estate standpoint, but just seeing how to run a business per se in India is extremely challenging. And I think the biggest thing is that it gives me a whole other sense of purpose. And I think that's the biggest, factor in this whole thing. So I think the sector is just sort of incidental sometimes.
Shraddha, if I can bring you in, there's one point that Pavitra mentioned. This is sort of a male-dominated business, and she said is that whilst she was doing her graduation, and even through the post-graduation, and both of you have studied in the US.
Shraddha, you and Pavitra, who've probably been meeting for the first time, but I know both of you have studied in the US. Two questions to you. One is, what is the dinner table conversation? Do you talk work? I mean, you've got your brother there, you've got your dad there, you've got your uncles there. One is that. And second is, do you see that this business will change from being a male-dominated business? Sorry, Shraddha, you're on mute.
Hi. Okay, firstly, question one, definitely dinner, breakfast, lunch, every holiday outing, any random social, we're sitting four of us and we just be like, did you see what's the new project launch? What's the new crazy area and news happening in and around? So I would say, yeah, dinner table conversations. And that's what's even gotten me more into the business, because since I was a kid, I have been grown up listening to all these conversations. And sometimes, we are randomly just sitting, the four of us, or if we go somewhere out for coffee and my dad would just pop out the question like, did you see today's jacket? And I'll be like, oh no, so it was today's jacket advertisement, any new project that's been launched in the industry, or any new technology that's come out here. I would say it's a pure real estate family. And secondly, to your second question, can you just repeat it again?
Is it sort of a male-dominated industry? Very few women were so successful, and I am so delighted to have two of you on the panel.
No, I'm not gonna deny the fact that it's a male-dominated industry. It definitely is, because at some places where I've experienced environment or licensing, or at other places, definitely it's more of a male-driven business. But I would say the women equally now, it's kind of adding a good touch, because there are as many women bankers, women brokers, women salespeople, media-driven PR. A lot of girls are into the PR teams of the companies, marketing teams, and HR. So I would say it's a by and by, because architecture is also a very woman-dominated industry. It's an equal industry of male and women, but I would say, yeah, buying a home, at the end of the day, a woman is something that fulfills, nurtures, empathizes with the customer. And, this is what even gets them to the table. Yeah, you know what? I really have to buy this house because she's convinced. So
nice.
It's going to be getting there.
Karan, I've had the privilege of working with you, with not you as much as with your dad. I am on the board with him on the Embassy REIT board. And I knew your dad only as a very flamboyant, successful businessman, Mr. Jitu Virmani. And through the board, I discovered, he's very astute, far quicker than the independent board directors in terms of calculations, and is able to see 7 steps ahead. But the exterior that you see of your dad is about flamboyance. And then I've seen you and your brother, and there's zero flamboyance in the two of you. If anything, it should have been the other way around, that the next generation has inherited so much wealth, and the flamboyance should have come in the two of you. So what did Dad do right to not get you two into the flamboyant lifestyle?
I think you have to actually ask my mom that question. It's not so much my dad, but it's more my mom that has obviously brought that. But to be honest, I think both of our parents, or at least me, I got to see the entire rise and the growth of the company, and it was never something that we were sort of completely born into. Seeing, I think, my dad work and be home late and all of that stuff actually has its own impression on both me and Aditya. And also, if you know him well enough, you know that, there's no free lunch. You have to work for everything. And so that's just been in the way that we've actually grown up, is to always just respect the work and everything that comes with it, and actually have to put in the work to actually enjoy the lifestyle that we have. And I think that's something that we all three are very particular about. So
Yes.
So yeah.
And Karan, as millennials, usually millennials lack patience. Real estate is a business of patience. I've seen all the three gentlemen who are here, Mr. Jaishankar, Deepak Garodia, and Jitu, very patient. When it comes to negotiation, oh my God, they have patience like anything. And as millennials, the millennials have very little patience. So how does this dynamic work between the Gen X and the Gen Z?
It's a very good question. I think that it's, I guess, like a story of maturity. If you see that I'm in a business, or chose to be in a business that is not so much on the patience, but more on the speed. And there's been a lesson learning in that as well. But I think that, it's a good balance. And sometimes I actually would say it's the opposite, where me and Aditya kind of saying like, let's calm down a little bit, and that is, on the front foot all of the time, and so that's a constant discussion that we keep having.
Jitu, if I can quickly ask you, what are the learnings that you had from Karan and Aditya?
I think, firstly, I know that the new generation is far more intelligent than all the old generation. I think they're far more mature than the old generation. I think they have the ability to think in a very organized manner, and they're not so much about the size, but I think they're about how they want to do things. So I think that it's to me, it's been actually I've learned a lot from my kids. And I'm still learning every day. And, just yesterday we had a brainstorming session in my house from 11 o'clock till 7, senior guys. And like Karan just mentioned, so they're always saying that let's do things in a more organized and a slower pace, and then do it properly. And of course, I know that Jai Shankar and me, when we see a good opportunity, we don't let go. So, and they look the other way, that they think the opportunities will keep coming, which is true actually. So it's just a style. I think when you build a business, struggling and surviving and trying to reach to the top, and then you're a generation which you have something on a platform, but you're mature enough to look after it in a nice manner. So there are a lot of kids who could screw things up, and there are kids who could take the platform to another level in a much better organized manner. So I think that the three of us sitting here are lucky with three good kids, that who are able to be balanced and take our platforms in a much balanced manner, and keeping the reputation built far ahead of everything else than money. Because here you find these are contented kids who've never been refused anything, but have never gone overboard or being greedy, So, and of course, all this upbringing is, part of from their mothers, and I think it's done well. It's worked well for me. I see it's worked for my colleagues in the panel also. So, I think we should. I mean, I see a lot of investors, billionaires, or big business people who have their kids, either playing guitar all over Europe or running an orphanage in Rwanda. When we have so many orphanages in India. So I think we're just lucky, correct, guys?
Yes. That is true. I mean, it's difficult to say anything nice because the Gen Z is on the screen. But I can tell you, Jitu, I think this screen is blessed with the quality of talent who's coming in to the respective organizations, and the ethics, the culture. The biggest thing that I can say is the humility that they bring onto the table, given that they are coming in from a lot of wind beneath their wings, because they are getting into very successful organizations. So it is true, Jitu, that it is very tough to be able to handle that kind of success and wealth and still remain very level-headed. So I absolutely pass on that compliment, what you said to the next generation. Mr. Jaishankar, you are very conscious of values, and the organization that you've built across has been fundamentally on the values. How have you been able to pass the values to both your daughters? I would say equally to Nirupa and Pavitra. Is it sort of a more formal way of passing it on? Is it informal? How has it been?
Thank you, Anuj, and it's truly a pleasure to be a panelist among friends like Jeetu, and though I don't know Deepak much, it's really good to see his kids. And Karan also, I've just spoken to him once or twice. And, just to add one point, what Jeetu was saying about Gen Z and others, see, like Jeetu and me particularly, Jeetu particularly, I would say, used to do business with a lot of instinct, or the way we have grown is all through instinct. Whereas the Gen Z is, they do with a lot of data, a lot of analysis, and not that instinct is not there, but the proportion of instinct is much less than us. It's a 80-20 instinct versus the data in our case. It may be the reverse in their case. Of course, it's also true that when we started business in the mid-80s, there was no data available, firstly, in real estate. And thanks to you and some of your colleagues, all the data is flowing in. That's why whenever if you ask me, and so some of your colleagues in other companies ask me about real estate, what's happening, I said I can talk only about our company and maybe our city. But you guys know the entire, maybe I would say, the horoscope of most developers across the country. Yeah, and on these values, every company has its values, no doubt, and all of us do follow the values. But about 10 years back, we felt it is better to ink them, ink what our values are. I mean, if you say trust, every builder say the trust is important. If you say quality, every builder say customer is important or quality is important. But in order to inculcate not only to my children, daughters, it is to the organization as such. See, the staff in the organization should know what we stand for, and of course, we need to live by it. So about 10 years back, we inked this, our core values of the organization. We called it as the QC first. Q standing for quality naturally and C naturally for customer. F for fairness in our dealings. I for innovation in our whatever little innovation we can bring into the sector. We are not a research-based organization to say that every other day we have to be innovative, but considering the sector, what innovation we can bring, and all of us have to be, in addition to doing business, we have to be socially responsible. So F for fairness, I for innovation, R is for responsible socially, and T for trust. So these are the values by which we harp on this in the company town halls, company communication, and we do have a daily prayer in the organization. First thing in the morning, we talk about values. We talk about unity. We sing a national anthem every day in the office. These are some of the things which we have done. And also going the next step forward, we print our values in the business cards. We print our values in the letterheads and maybe magazines. Like that, it is inculcated, and we always talk about it whenever an opportunity comes. So that way, and of course, ultimately, the proof of the pudding is in eating, and saying is one thing, and living by it is another. So we try to live by it as much as possible. That's why I think
Yes.
lead by example is what I say.
I just want to follow up on that. What was the moment that you felt that Pavitra and Nirupa are ready to take on the baton?
No, as Pavitra rightly said, we never pushed her, to join the business. Just to go back, when she was in high school, she wanted to be an architect, or an engineer. She had plans of joining IIT. She was working towards it, and I gave a book on economics by Paul Samuelson in the 10th standard or so, and she got very angry. As I said, I'm least interested in economics, and you're giving me economics book. So then she went to US, and she did when she went to college, she did take economics, though I didn't push her to do that. And also even after undergrad and working for a few years in an insurance company, and one fine day she called me and said she is joining Columbia and taking real estate MBA, a specialization. That was quite surprised me, but also pleased me very much. So that's why I knew then I can hope for
that was the moment.
Hope for the next generation. Otherwise, we are a listed company. Now you can always exit whenever you want to.
Deepak bhai, coming to you, two questions to you. One is, did you know that Anuj and Shraddha were going to join the business? Did you know right from first day that they were going to come into the business?
Good evening, Anuj, and good evening, Jitu and everyone. The thing is, I had a desire that they should, but not very, very confident when they were studying. They were studying, and the ideas while going to universities, everybody has a different ideas and different vision of the life. One is about the art and culture, something about the physics, and something about the chemistry. Nothing about civil engineering, nothing about the design and architecture. So while they were into university, I was little looking at it that if you have to do other things than this, then I think very limited from my side to continue. Something real estate is the only thing I understand. Other things I wouldn't understand. But gradually, maybe after say 1 or 2 years, the option of a junior year, sophomore year, they tend to go into the marketing, and then they tend to go into the civil engineering. So I was a bit relaxed. Now the thing seems to be that what I had aspired to be, now they are coming to the things which is into the things which definitely how the things take shape, but they would gradually come to the real estate. And the thing is, finally, both are into real estate. So I'm happy being a family of real estate, and things are working well. Things as others discuss. We enjoy working together as such, being two generations working together. It's a different way. We, of course, need a patience from our side. They also expect that, feels that to work with that, they also need some sort of a patience, because they expect some quick thing, which I take a time to decide, and it happens, but still, it's a fun journey.
Yeah. And how do you divide the work between Anuj and Shraddha?
I left them, both of them, to decide where they want to work together, and whether they want to work independently instead of me interfering and guiding them to do that thing. Let them only work out whatever they're comfortable with working together. Something they work separately, something they work together also. Yeah.
Super. Anuj, I'm going to come to you, and given that we both have we are namesake, I'm going to ask you a tough question. Anuj, what are two things that you would want to change? Two things that you would want to change.
Hi everyone. Hope you can hear me. Thanks for having us, Anuj. So I would say there are a lot of changes, like both me and Shraddha are keen to implement in the near future and long-term future, certainly. Certain things have already been changed in the last 4 to 5 years of work. But I would say that firstly, something, I mean, it's a fairly challenging question, but I guess something I would say very important for us is to become more technology driven in every aspect of our business, be it in sales and marketing, in onboarding customers, in sending automated demand letters, and I would say that's about technology, be it for sales and marketing, and for construction and implementing new systems used in the Middle East and the US, Europe, in India. But all of that certainly will come at a cost to the company. So we always kind of weigh out the cost benefit and then decide whether it makes sense to proceed or no. Other than that, I would say one other important aspect I feel that we should have in our company, or we would like to change as soon as possible, would be like ensuring that how do we get talent into real estate, seeing that how maybe graduates from a IIT, from a IIM Bangalore, or from a VJTI local colleges here in Mumbai, Maharashtra, how they further, I would say, pushed or groomed at a very grassroots and ground level to look into real estate as a long-term career for the future. We know a lot of companies are actually doing this, and even I had done a short program with IIM Bangalore where I had a small tie-up with them. But it would be very crucial to get such talent into the industry at a very young age compared to them joining at a very experienced stage. So I
Very
think
well answered.
that's
Very well answered. Technology and talent, you played it very safe. Dinner is going to be enjoyable tonight. Jitu, when do you retire? Or you never retire?
You know, Sindhis never retire. No, so I mean, to large extent, honestly, the boys are a big help, and a lot of stuff is off my back, you know, and I'm pretty much more involved in all the strategy, the development of the company, and of course, still keeping an eye on the financial part. And I see that going forward, you know, just to be involved in these two areas, you know, as I've always said in other forums also, that in our business, finance being the most important and well balanced thing. And yeah, I think they've taken a lot off my plate, and the whole thing was that in our company, it's been all about empowering younger people. So I'm sure you interact with a lot of people in our company that are mostly younger people, and they aren't many Harvard educated from IIM, MBA, you know, but these are all street sharp people trained well from the grooming period. Uh, they come at a reasonable price. They stay long term. They stay long term, and you know, we have a way of sharing profits with the staff. So I think in the long run, that has helped the company. And because I knew the kids were going to come in the business 10 years back, I had surrounded them with younger people, you know, and that's helped a lot. So that they have people around them working who are like 7, 8 years more experience than them, or 10 years experience than them, but not people in the 55 and 60s and stuff like that. And I think main is empowering and you know, trusting them, but of course keeping a watch, you know. So you know, they say there's a difference between relegating and delegating, you know. So I think that's a fine
Nice.
line, you know.
Nice. And Jitu, how you've been able to really extract yourself from day-to-day operations? I mean, you've done it brilliantly. I don't know many people who've been able to so successfully do it. I mean, it's perhaps a little wider question because it's not only about Aditya and Karan, but overall as well as a personality, you've been able to really, you know, take yourself up to sort of 10, 15,000 feet rather than at 1,000 feet doing everyday work.
I think it's my skill set of ability of trusting people and having a good eye on finding good people whom I can trust. So, I mean, I would say that even the boy who actually brings me coffee in the house from the, you know, from my CFO, or you know, people, our partners being around, I think that trust has really built a big play in my being like this. And also maybe I'm just been lucky that I've been surrounded by good people, so I haven't been in a situation where somebody's let me down as far as my trust or my vision and their ability to do things is concerned. And like I said, you know, the boys are a good platform. I also didn't force them to come into the business; they came on their own. And you know, I have my youngest one now studying in LA, and you know, he's also keen to join the family business. We spent a lot of time during this COVID period to run through things like how the family business would run ahead, you know, how decisions would be taken. You know, tomorrow they get married, they have kids, their kids would come in the business. So putting a family charter together. And I saw very, ENY was helping us with that. And I saw very mature way of them answering things to some of the very tricky questions which ENY was asking.
Yes.
And ideally, you know, me answering them also would be in a tricky spot, but I think their consensus was good, you know, like I think I'm in good hands as far as the future is concerned. So I think it's going to be easy for me to just stay a little bit away like that. And as you've seen that I only involve myself in some major decision making and everything runs on its own,
Nice. Pavitra, we saw this big crisis that came through, during the pandemic. If you didn't have support of Dad, how would you have managed it? Would you have been able to manage it through, or you would have really felt his absence?
Absolutely, we'd have felt his absence. And I think that's something that, that we all realize. And for the whole company, my dad is sort of the leader and the one that all of us look up to. And not just from a family perspective, but also as professionals. And I think that's one of the big challenges that we will face. It's not just succession from him to his children and the generation, but it is also how are we professionalizing this business? And to an extent, we have done that. We have CEOs and COOs running all of it. But I think it's still going to be a transition. All of this is going to happen at one time. Going back to what happened during the pandemic, I think he has a very, he's very definite about how he's going to approach these things. And I think that was different from maybe how I would have looked at it, or maybe others would have looked at it. But honestly, like looking back, I don't think we should have reacted in any other way than what he did, even if it seemed, like a very sharp pullback from, our normal course of operations and how we should really, prepare and sort of hunker down. A lot of it seemed a lot more severe than I thought. But then again, he's the one who's seen 4 different real estate cycles. For me, I think as a working professional, I sort of saw it from 2008 onwards. Or 2002, but that was just when I was looking for a job post-college. So, it's been a huge learning for all of us. But I think today, Brigade is still Mr. Jaishankar, and that is completely fine. For some of us, it makes our lives a lot easier. People know what to expect when they come to the company, and that I think a lot of it is something that we would want to retain and keep in terms of our core values and in terms of our approach. So I don't want to trade away any of those things. Actually, my team will say a lot of times I tell them, if you're concerned or need to know how to react in a situation, you should think, what would CMD do if you're confused?
Nice.
He has the right approach. He will keep all stakeholders in mind. And for employees or different departments, I think that's something they need to understand. They need to see from an organization and all stakeholders standpoint rather than, just their own little world. So it's sort of like it's just like a way of also just saying what should you do from an organization standpoint. But then again, it has a lot more impact if you put it that way.
And then, Pavitra, it is true that, the generation that we guys represent, we have seen several of these. And, we were of an age at where you are today, maybe 20 years ago, maybe 15 years ago. And, we did what you are doing it at this moment in time. But I think what Mr. Jaishankar and the way that you related that he hunkered down, pulled back, all of us, did that as a knee-jerk because we didn't know whether this was going to be long-term or not because we had seen previously long-term impacts. I think he also opened it up very quickly once he knew by August that, this is not going to be that long-term. But that's a very good point that you say is that most of us who were experienced really held the horses back. At the end of March to say, guys, let's just wait and see what's going on in this world. And those who did not, they went down, and you could see is that the level of maturity was very different within the organizations who just continued with that. They had not seen those recessions. And that's why, some of them found themselves in some trouble. But good point. Karan, you're into technology and, the way you represent WeWorks and hopefully the way you're now going to take over the India Bulls your real estate arm in Bombay. Do you think what Anuj brought out the point on technology, we're going to see this generation being able to push technology into real estate? And reason that Karan and I ask is that even when I was running JLL, it used to be a very common belief that this sector does not adopt technology. and I've seen that in Analog as well. It is very difficult to get this sector to adopt technology. I think we're amongst the last sectors left who's averse to adopting quick technology. What's your thought going forward, given that you're now going to be running, embassy residential along with the India Bulls real estate?
Yeah, look, I think there's two parts to it. I think, whenever everyone thinks of technology, we think that we need to build these fancy products, or, users need to start suddenly getting on an app or something like that. And, that's suddenly going to change. That's going to become technology. I think technology and using technology and data needs to become core part of how the business actually operates to start with. And I think that's something that we're actually, focused on right now, at least, initially, is to first just, digitize the internal system within embassy to start actually leveraging technology, whether that's the way we use some applications like Salesforce or SAP, and actually do reviews on that, and actually use all of that to to measure a success, or also to collect data from different points of the business. Our business is so vast across so many different verticals. It requires like an infrastructure at the back end to just be able to, grab the right data, and people to be able to fill the right data to start off with. And I think once you're able to do that, and you just change the DNA of the internal organization a little bit to leverage that, that's when after that is when you actually have to start using technology for your users, because unless you're able to do that, the user experience is never going to be seamless, for the end user. And at WeWork, actually, we had the advantage of, some of that already being built out, or the actual business, being enabled by technology from the start, which has allowed us to, innovate and actually put out new products. Like we just launched a product called WeWork On Demand, which allows you to, get on an app and actually book a workspace for 500 rupees at, like Zomato or Swiggy. And it's just giving, workspace on demand whenever remote workers or whatever it is needed. And that's because we were a little bit, newer and more nimble, we were able to do it a bit quicker. You have, an organization that's been around for 30 years, and you have people who have been doing something for, that long. You need to actually focus on transforming that, which is not an easy task, and it is very difficult. But as the users actually, become people of our generation, as your buyers become more millennials, as the occupiers within the office spaces are more Gen Z and millennials who are already used to using technology, and you're basically a cyborg now with your phone. You do everything, like your mind is thinking through your phone. You're already like part machine. It will eventually progress to that, because then the way that you're living requires technology, the way that you're working requires technology, and it will be a gradual change, but it's a big momentum shift that you have to create with the biggest players in the world, right, and actually adopting it. The more interesting part actually is that the ecosystem of newer startups and also people from outside the real estate industry who are looking at real estate from the outside view and saying that, look, I can probably solve this problem because I have a certain amount of knowledge and technology and expertise. You're seeing a lot of startups now actually focusing on prop tech and actually solving, these problems. And we don't need to necessarily invent something. There are many people who are inventing it for us. We kind of just have to pick the right ones and nurture those and actually grow it that is right for our business. That's what we are focused on right now. And I don't know how long it's going to take. I know, we hired a CTO maybe 3 years ago. I don't know really, I haven't really seen much of that happen yet, but hopefully in the next few years, there will be a big change.
I think the trouble is that the CTOs that we guys hire are in their 50s. That's where the trouble comes in. Karan, but Karan, you mentioned a super point. By the way, we guys are very averse to get people from outside the industry to come into real estate. We are fascinated by just recruiting from within the industry itself. And it is such a challenge to get in the talent because all that we are hiring is hiring from others, but really not going out the way that you've explained. And there is beautiful talent outside. And we do hope that Gen Z does bring in that talent from outside. Otherwise, it is all about this guy's applied. Is he a good guy or not? So you just try and hire from within the industry, and would love to have this Gen Z in talent from outside. Shraddha, I'm going to come to you. I know your organization well, and there are many people who work with Dad for decades. And you have a great idea. How do you implement that idea when these people have worked with Dad for such a long time, and you have to change their habit to get into a different idea? I know you're big on sustainability as well. And from most of their perspective, it is going to be it doesn't make money, Shraddha, so we're not going to do this. Into it. How do you actually implement it? How do you get the organization to agree? Is it that you have to go to Dad and then he percolates it down, or you have to work your way through the system without sort of annoying the people and then thinking, oh, it is the boss's daughter and that's why we have to do this for her?
I mean, it's not an easy job at all because when certain companies built a certain way, you can't just completely come in and bombard them and tell them everything that you guys are doing is wrong and I am the best just because I've had that education abroad and interacted with kids from Columbia and Harvard and like all these professors, and you can't overrule the management. So at this point of time, it has been, in fact, this has been the most challenging job for Anja and me, and I would say that we have succeeded because this year it's been almost 5 years or 6 years since I've been working with Dosti, and a lot of the things have fructified like during the COVID, and we've had a couple launches taken place which have been very successful because of all these new strategies that we have driven. But it has been a very mentally exhausting journey. It's been very demanding, and yeah, I would not say it's been a lot of nitty-gritty and hard work because the management is all the way towards the end, but there are so many junior and senior executives and managers that you have to first work with, understand, explain them what software is, how do these softwares operate, how to put it in Word presentations, because Anuj and I have, at this stage we are working towards making the company culture very professional and very digitally and technology driven. So it's, and we are trying to adapt to all these measures with value engineering strategies because, the company cost is very, very important, especially after everything's playing out like GST, demonetization and COVID, that, your cash flow has to be your Bible. It has to be in front of you on a daily basis. And I guess that is the only thing my father has kind of, just told Anuj and I, that whatever you all do, whatever you all think of implementing, whatever you guys want to change, please take a look at your cash flow as if it's, your bread and butter of the day. And then you can figure it out. So it's been pretty, we still have a very long way to go, but by and by we do get there. And yeah, that's what I could say.
Anuj, if I can continue with that, so what do you call your dad in office?
So we normally refer to him by his initial, just by DKG. Addressing him as dad, or maybe if I go to his cabin for a discussion one-to-one, then it's a different scenario. But if we're with an architect, we're with a consultant, then it won't look appropriate to maybe call him that also.
But yeah, no, I was just asking on the side. But Anuj, must be a tough one. I mean, I put myself in your shoes or Shraddha's or Karan or Pavitra's. Sometimes I think it's probably easier if it was not that you were working for your dad. Because, one thing, and I know your personality and Shraddha's personality well, you don't want to be known that you are Deepak Garodia's son or daughter in the organization. You want to have your own identity. So without rubbing off some of the guys whose decision you may not necessarily agree, but you have to follow their their pattern, because you don't want to suddenly start to throw your weight because my second name is Garodia, and that's why you have to listen to it. By the way, I have a lot of youngsters in that category who do that, but fortunately, this screen does not have that trait. But what has your experience been on that particular point? That how do you delicately manage, between being dad's son and a manager of the business?
Anuj, sorry, I actually lost your voice for a few seconds.
Okay, sorry. I was just saying is that how do you manage the conflict between being dad's son in the office and then being just a professional manager?
So I think to address something like that it's very essential to go through the life cycle and live the life of an employee. But when you have to make a stern decision, you need to take that firm foot and make a stern decision. So be it if a certain employee is asked to wait till late and complete data entry or complete a presentation, you need to kind of you need to act like you're a part of their team.
Nice.
Longer journey home. You need to also endure and be in a similar situation. But I would say it all just comes down to balance. And maybe you need to identify the future who kind of are loyal to you and know that you are working towards the right path and right direction, although it may not seem like that. But once you have like a core team established, maybe to percolate a new idea or a new concept into the organization happens a lot more easier for me.
Interesting, absolutely. We've got just 3-4 minutes. I've got one question each to Deepak Bhai and then Mr. Jaishankar. Deepak Bhai, our generation made a ton of mistakes. What are 2 things that you would say is that this generation should not do? From a business perspective, and then Mr. Jaishankar, I'm going to ask you is 2 things personally that they should not do or that they should do. So Deepak, by business for you, 2 things, the mistakes that we've made in our generation that we say to this generation, guys, just be careful, do not do these 2 things. And then Mr. Jaishankar on the personal side, after Deepak Bhai has completed his.
One is that we as a developer always hota hai, chalta hai, part of a thing that we'll find a solution someday. But as an take a call sometime. And we may be right, we may not be. So the one is that proper study, research, and then take a call and value to the whatever value you've been doing the business. You stick to the ethics, moral, and value, and then you will definitely succeed. Of course, hard work is always there. So along with the hard work and moral and value, you need to work towards getting the things to the right direction, and you get a success.
Super, absolutely. Mr. Jaishankar?
Anuj, it's a difficult question, but still I'll attempt. One is...
I can see from Vitra's smile year to year, I am very attentively listening to this. And one of this, I hope, is work less.
I hope so also.
I would put it this way. One is, of course, as I mentioned earlier, stick to the core values. Work less, yeah, okay, but work smart. You see, there is no free lunch in business. You can't work less. You can't not do this, but still you can't be lucky. And I heard somewhere, what is the definition of luck? Hard work increases the probability of your luck. So that is one. Everybody will say, okay, X is lucky, Jitu is very lucky. But nobody knows how hard Jitu works. Or most don't know.
Yes.
I consider him as a financial genius in the real estate sector. And
No,
also,
well said. Yeah.
success would not be easy. He has worked damn hard, and then others may think he's lucky because he's also flamboyant. That hard work, flamboyant together is a rare combination. So that is one. And see, be patient. Don't jump to impulsively. Don't act. Be patient and take care of all the aspects. As I said, the stakeholders and whatever a long-term thing, approach. If I do this, what may be the impact of that? It's a business is slightly like a game of chess. I don't know whether it's which is more complicated. I don't know, but it is like a game of chess. Particularly when you deal with landowners, when you deal with the government authorities, and it is quite tricky. So handling government authorities, with kid gloves is very important, and that is something. And no, what she should not do, yes, she need not work as hard as me, but let them work much smarter than me.
Nice, nice. This is a great summary.
Yeah.
Not as harder, but more smarter than you. Jitu, final 1 minute. Where are we going to be 20 years later? At least the four of us are not going to be on the screen. You, Mr. Jaishankar, Deepak, and myself, we're on the screen. Where do you think this industry is going to be with the four youngsters who are going to be on this on the screen and perhaps sitting in our chairs at that time? Sorry, Jitu, you're on mute.
Me watching the younger generation, and I'm not Deepak Bhai, I'm not being biased, but especially from Bangalore, I see the way business is run. I think this business is going to be run highly professionally. It's going to be administered more in a balanced way. There's going to be a lot of technology, and I think it's going to become a much more respected business than it was when I started.
Nice.
There were times it was really not a nice thing to say you were a developer, but I think a lot of respectability will come into the business as these younger generations who are more customer friendly and more quality conscious and more ethically much better than the older generation, will come in. I mean, I see business has a great future. In fact, I keep telling Karan and Aditya that, this is the golden era. From here, 10 years, 15 years down the line, there's no stopping, like there were these large family-owned businesses in America which became huge corporations. And I don't see it being very difficult for these kids to build a large corporation worth billions of dollars, just by being at work and just being the right things at the right time. I mean, I think that it is. And, you were talking about making mistakes and everything, but, we can teach them about the mistakes we made. But I think my kids will be successful if they make mistakes, because the only way you can be successful is if you make mistakes, So I would hope that they make some mistakes, newer mistakes, so they learn better and take the company to, larger heights, So that's my take on this. And
So-
Jaishankar, to your saying, the harder you work, I have a really nice saying for that, success is like pregnancy. Only you know how many times you got screwed, so, it's so true, because I don't know where this flamboyance keeps coming from me, but I think it's just come from because every time I do things differently than other people. But
It's your sunglasses, Jitu. It's your sunglasses.
no, I decided to sit outside in the garden and do that. No, I also have I had an eye surgery, so I need to wear them. But I think we are in good hands. At least I can speak for the people on the panel, and a lot of friends around me also. I see them. The kids are really, humble and down to earth, and we have a good future in the real estate business.
I agree with you, Jitu. I think India has a great future. I mean, this generation which has come in, they're hugely intelligent. They're fortunate to have a cosmopolitan education, very international. They have understanding of the best practices. Equally, I hope they continue to retain the values that the Generation X has imparted on to them. And it is true that it is becoming a more respected profession. It's becoming a more respected industry. And hopefully, Jitu, as you said, in the next 10, 15 years, as this generation gets into more powerful positions within their respective organizations, They enjoy the golden era that is here to stay for at least the next one and a half decades. So great. Thank you very much. Sorry, I've overstepped a little bit on the time, but it has been absolute pleasure. Delighted. I think we could have done this for a couple of hours. Hopefully, we will get back again at some stage soon. Thank you very much, all of you, taking up the time.
Thank you so much, Anuj.
Thank you. You
Respond.
surprised everybody with your questions. So bye everyone. Bye.
Bye.
Bye, Steve.
Bye.
Thank you, Mr. Puri and the panelists for that excellent session. May I now request Mr. Anuj Puri to kindly deliver the closing remarks.
Thank you very much, Ronit. It has been absolutely phenomenal 2 days. We started yesterday afternoon, and we had Dr. Ajit Rana Day and Mohit Malhotra. We discussed about the economy. We discussed about the residential real estate and how the residential real estate is getting more mature as the formalization of the economy is taking place. We had an interesting session after that, which was moderated by Kailash Babbar of Economic Times, which had all the powerful residential developers across Maharashtra. And we discussed the bounce back of the residential market. We discussed how the residential market post this pandemic was going to come out more mature and much more stronger. We then had retail discussions, and it is fortunate that we've started to see green shoots. There is positivity that is back. The panelists discussed that. Clearly, tier 2, tier 3 towns are doing much better on the retail. And then yesterday we ended with the hospitality sector, where we discussed that the local hotels were doing much better and much more profitable than some of the branded hotels. This afternoon, we started with an interesting session, which was on digital adoption. And we discovered that this is now not only about lead generation. We're seeing that the full closure of the transaction on the sales side going through the digital platform. It is the first that we are starting to see, but hopefully this is a trend that we will continue to see that will remain in here. And thereafter, we work through on the technology and how technology is taking a key position within the real estate sector. And then we discussed the co-working, and which is one of the positive features in the office leasing segment, and how the co-leasing operators are doing much better than the traditional commercial spaces. And then we ended with a fantastic panel discussion between the Gen X and Gen Z, and whether Gen Z was ready to take on the world. With this, we will come to a close of the CII Real Estate Confluence, which was the 3rd edition in the series that we've had virtually this time, unlike the past when we've had it in physical form. I hope you've had a good time. Thank you to all the panelists who've been here over the last 2 days, and to the viewers who have kindly logged in for watching these sessions. Back to you, Ronit.
Thank you, Mr. Puri. Ladies and gentlemen, with that, we come to the end of the 3rd CII Real Estate Confluence. It has been an excellent session, and I would like to once again thank our partners who have been with us throughout, the Anurok Properties, who are our knowledge partner, the Lodha Group, who was our gold partner, and obviously the Vaswani Group, who was our silver partners. Thank you. And with this, I declared the close of the 3rd CII Real Estate Conference.
Thank you, Ronit.